Yep. Good morning, good morning. How is everyone? Good morning, good afternoon, good evening. Can you hear me? Let's welcome. Have a good morning. Good. Good morning, good morning. Good morning, good afternoon. Good morning, Miss Mizzy. Good morning, Snapper Victor. Hi, Elmo. Hello, everyone. Good morning, good afternoon, good evening, wherever you are. How's it going? How are you? How y'all doing? How was yesterday? Did people graduate yesterday? Sniper 7? Congratulations for
Good
Sniper
morning,
7. Good morning, Terry. How you doing?
Fine, thank you. I thought I'd pop and just say good morning to you. I wasn't there last night on the workshop. How was it?
I was in the I was in the production. I was in the football stadium. So I didn't manage to get in on the graduation. That's why I'm asking.
On the workshop either. Okay. Well, I thought I'd say good morning to everybody and to you, and then I'll pop out and let you do your thing. I'll jump in just now again.
Okay. You're more than welcome. Thank you very much. You're more than welcome.
Okay. Bye.
Bye-bye. Right. Good stuff. Good stuff. Coffee and chocolate. That's my favorite. Still in bed. Okay. No worries. You can listen and watch from bed. It's fine. Right. Good stuff. Let's have a look. What's going on to the markets? Bitcoin is doing nothing really. Yeah, all boring story, you know. It's going a little bit sideways in a very, very slow manner. Too boring. Yeah, it's going towards that trend line. Very, very, very dead slow. And this is a 4-hour chart. Not a lot of movement, not big candles lately. We had this dump, and that triggered a little bit of some altcoins, and they had some movement. This is Bitcoin dominance against the USDT, and you know, we had a little small pump there. It's telling you that the dominance of Bitcoin against Tether, which is a stablecoin, was rising. It's becoming more dominant, so it's telling you that Tether was the cash flow from Tether was going up. So if I bring up the chart of Tether, the dominance of Tether, we shall see the opposite, yeah, going down. So let's have a look. Tether, which is the stable coin. Yeah, that was a dump here. That's the one. That one here. So we see a lot of dump. Let's go back to 4 hours so you can see that. We saw all that down movement happening. It was like, okay, what's going on? They're pushing money into the crypto, a little bit consolidated, and then it's going up. It's telling you now that people are selling and they're going back to stables. Yeah. Remember, when you get these sudden movements, a drop, a pump, usually after a little while, after consolidation, they come back to where it was. Yeah. Total one, all the crypto space, including the majors, we saw all this huge move up and then consolidated a little bit, and then it came back. So technically we are back on the same levels where we were before of that, that pump, and then it's come down to the same levels, right? So we're back to square one. Tier 3, the candles are a bit wider, and that was an indication telling us that that pump that we have, it was mainly on smaller altcoins instead of the majors. Yeah, and that's why we didn't see anything moving on Bitcoin. There was no movement in Bitcoin. However, the alts move, and that is because Tier 3 indicated us that we had major move on the altcoins, on the miners, so to say. That's a very, very quick overview to see what's going on, where the cash flow is going. and whereabouts we are. And basically, if you just draw a rectangle, you understand that we are back again to the same levels. Yeah, just one day or two, you gave that excitement, and then oops, it's coming back to the same levels. Yeah, so nothing really going on here. Nothing. Now some altcoins dropped. BNB dropped. It's keep on dropping. AVAX, it was on a very tight stop. Remember that we said that was on a very tight spot, and what happened in the end? It became to be a bearish flag, so it went down. Same with the Doge. I believe with other tokens as well. Let's have a look on the let's have a look on HBAR. What happened with HBAR? Yep, HBAR coming back again. We saw all this massive pump on HBAR, and now what they're doing, they're selling at the top, and it's coming back. Most likely it's going to come back to these levels, right? So not point of you chasing either the pump or either the dump, right? You just want to be where you are in the key levels. You're interested, your point of interest will be when a token is coming to a major level for you. And they say, okay, I'm going to be patient, I'm going to wait and see when you come back to my point of interest, then I will do again my TA and see if I can find any opportunities. Miss Missy, you're more than welcome to come up, please. I'll give you the invitation. Sand, okay, let's have a look on Sand. We gave Sand as well the other day, didn't we? Right, dropping, okay. Yeah, everything dropped. Everything went on that very tight spot, and then it just lost it. Right, okay. Right, so, Sand. Let's have a look on the bigger picture, because it is important for you to understand the big picture, right? What do you have here? What do we have about Sand? Sand, it was like dropping, did a correction, dropped again, and did a small correction, and then drops again. This is like good and bad news at the same time. Good news for, let me unlock that. Yeah, roughly about that. The good news is that all these altcoins are going down to levels that are very cheap. And guys, I'm not going to be always coming here and telling you always the bright side to make things look nice. Yes, what I'm trying to do though is I want you to see the bigger picture, like these levels here, that is getting close to these levels again, and it's getting close to these levels. Now, why do I mark these levels? I want to give you another perspective. That it was back in January. You will remember that January Bitcoin was down at the 15k area, the 15k ish region, and then it started moving. That was, let me do horizontal lines for you to see it a bit better, and I can do the daily, make the candles a bit bigger. So what I'm very excited about it, because I want to do a major DCA on my positions that I had 2.5 years ago. So I know that Bitcoin was on the lowest point recently, back in January, the beginning of this year. So that is December on Sand, for example, So I put an horizontal level there. So I'll make it a little bit thicker for you to see, and I'll make it like green or yellow if you want. That was the lowest point of Bitcoin. That was when Bitcoin, let's write there, BTC, when Bitcoin, what did I do? Double click, alright. BTC was 15k, right? And the alts followed Bitcoin, and that was the lowest point of the alts. Now, later, around this time, that was like June, the first week of June, we had another dip from the alts. However, Bitcoin was on 26k when that happened. Let's go back to Bitcoin and have a look on 10th of June. That was around the 10 to 15. That was around that time. I mean, this is when Bitcoin was like, this is the 10th, 11th, and the 15th. This area here, and that was around 24/7, 25k, right? So Sand wasn't 26, it was 25, around the time when Bitcoin was 25. Look at that. Altcoins came very close to the same level, even lower, had a fake out, and lower when Bitcoin was 25. So you got another early, let's say another very, very low entry on altcoins when Bitcoin was 25. You see, technically Bitcoin was like 10k higher, but the altcoins came as low as when Bitcoin was 15k. So that's interesting. That's cool. Now what do we get? We get another dip for the alts when Bitcoin now is sitting at what? Almost 30, 29.1. So I'll put that 29. Right? So a lot of people are feeling that they missed the train when Bitcoin was 15, and then the alts gave you another opportunity when Bitcoin was 25, and then the alts give you another opportunity when Bitcoin is 29. So when people are focusing on Bitcoin that is popping and is going and is moving, the altcoins gave you exactly the same lowest levels since back December, and you cannot ignore that. It's like it's giving you another, people that they missed the 15k, alts gave you the same levels again, and this is the third time, right? So it's like Christmas again for the alts. And I don't want you to rush now and go and buy on the altcoins. Keep an eye on these levels. Do keep an eye on these levels. And the reason why is I don't want you to rush. Remember that we spoke on Wednesday, the people that were here on Wednesday with me, I said to you guys, let's go to the daily, make a bigger candles there, more thicker for you to see. What I said, guys, is I do expect as the first, let's say, target condition. Oh, let me change the date. Today is not the 14th. That was on Wednesday. Today is the 16th. So let me fix that for you guys. 16th. Here we are. Nice and tidy up there. Okay, good. So what do I expect? I expect Bitcoin to come down to this level. Yeah, to that my horizontal. It's not horizontal. It's diagonal. As a first phase, I want Bitcoin to come down and see how it's going to react to this trend line of mine. Now, if it's going to lose it, my second target is going to be that level there. So I say, okay, let's see if it's going to come down here, right? And if you're going to lose that swing low, which is the lowest of that trend line, and if it's going to lose it, then I believe it's going to come down to my intermediate trend line. That trend line comes very, very long way back. It comes all the way back since 2019. I said, okay, if you're going to lose the first trend line, where are you going to target? The second trend line. Right, I gave you a very brief explanation why I believe this. If you didn't see the video that I posted on YouTube, I'm gonna do it really quickly for you, just for you to get the idea why I'm looking to these levels. People will not understand this now, and I said, okay, well, hold on a minute, why he's talking about this now. I bring up the MA 50 and 200 on a 3-day time frame, 3-day MAs, right? And what do we have? What to observe here? We observe that we had a bullish golden cross. That's the one there, right? We got the 15 going over the 200. Now, why 3-day? Less noise. So I see that and I say, okay, this is very bullish. Let's have a look. When did that last happen? I'm going to go very briefly because some of you were here, so I don't want to sound boring and say the same things every time. But for the people that are not here, we're not here on Wednesday, that happened again on this area here, which is the Golden Cross, and that happened all the way back 2019. Since then, it never happened again, right? That was like apart. When MAs apart, very good, very good. And then we had the first death cross, or the cross of death, right? When the 50 goes under the 200. That was the next event after the Golden Cross, right? And then it turned around, and now we have the Golden Cross. Okay, good, 3 events. So let's go back to 2019 and study a little bit what happened on Bitcoin after the Golden Cross. And what do we say? We say that after the, it was after consolidation, we got the first phase of the small bullish momentum. Yeah, like it's not a bull run yet, but it's like the first phase. It's like, when the dragon is gonna, it gets awake in his cave, and it's like waking up and is looking around what's going on here. So this is the first bullish momentum. What happened after the cross? After the cross, Bitcoin a little bit corrected itself after the cross. Yeah, let's put in a vertical line around there. So after that, you see, it was like bullish, and then after that, it started doing some correction, and it did what? What do we observe? We observe that it lost the first trend line, and it dived down to the second trend line of mine. That first trend line was recent. Let's pretend this is the 15K for our time, right? And this is like now, which is, let's pretend this is around 30, right? Or this levels here, let's say is around 30. So what it's going to do is going to come down, correct itself, come down to the first trend line, and then dive down. It's going to lose the first trend line, and it target the second trend line. That trend line came all the way back 2010, if I remember. It goes all the way, way back. Look at that, it's ridiculous. It goes all the way back 2011. So that is my major support trend line. So I said, okay, we know that, Bitcoin so far is going on cycles, right? It's repeating the same patterns, week-off patterns. I said, okay, if that's the case, that we all together observe that is like repeating the same patterns all over again and again. So if I pretend this is 15K, this is 30K, and it's going to lose the first trend line, then maybe it's going to target the second trend line. Okay, let's go now in the future to our present, and now you're going to see the same. Maybe I'm not predicting now, but I'm asking myself, is it going to do the same thing? Is it going to lose my first trend line and then target my second trend line down here? It's going to do exactly the same level like we had the cross, the Golden Cross. Maybe Bitcoin will come up a little bit and then target that trend line, lose that trend line, and then come down and target the second trend line. That can happen. That can play. It can. Now, why do I have this box here that says buy zone? Why is that? Let me clear that noise here. Right?
Sales.
Yes, ma'am. Good morning.
Sorry, can I just I didn't realise I'd been unmuted for so long.
All right. Good.
Basically, that you add on how you had the trend line there. Mm-hmm. Why didn't you use the next trend line down? Why did you go to the green long trend line? Not trend line, but the bottom support.
Yeah. I believe it's going to repeat the same thing. And let's have a look here. It lost the first trend line for that time, or that time period. It lost the first trend line and target the second trend line. At that time, that was my basic trend line, and that was the second trend line. So now here in the future, in future from 2011, what I'm saying is this is my first trend line now, my recent trend line, and this is my second intermediate trend line. And I said it's going to repeat the same thing. It's going to lose the first trend line and then target the second trend line for that range. For that range back there, That was the first trend line, and that was the second trend line. And I'm just wondering, is it going to repeat the same thing? Maybe.
Yeah.
Calimera to everyone. I see the messages there. So I'm saying is that after that golden cross that we had on a 3-day MA, 50 and 200 periods, right? We had that. I mean, this is a very bullish sign, but because it's lagging, let's say it's like going a little bit slow, I noticed that after that signal, Bitcoin came down to a correction and market shakeout. Let me clear that noise here. It shake out all the market. So what it did, it shake out all the leverage and all the people that were going a little bit too much bullish, got too much excited that Bitcoin was going up, right? They saw that was a level of 4,000, guys. Back then, that was like 2019 when Bitcoin was 4,000, and it was like giving all this momentum, and it went all the way up to 13,000. So from 4,000 it went up to 13,000. So that gave a lot of bullish momentum to the market. A lot of retailers came in, and what happened? They got wrecked, right? And the intermediate players, let's say the intermediate traders, that they know how to short, they were trying to short things down, right? But it was shaking everyone out, and it came back to these like major support. It came back down to 4,000. That was around 3.5, 3.4, and that was like 3.8, 3.9. So almost came back to the same levels. So I'm asking myself, is Bitcoin coming down to 15k again? I doubt it. It will not come to these levels again, but it will come close to these levels. And I believe maybe it's going to come down around 20k. That was the 15k, and then it will do the shakeout, come down, drop it a little bit, hit the bottom, that support trend line that comes all the way back, and then on the same time as well, if you draw a Fibonacci on the last wave bottom from the 15k all the way up to 31.8, which is the latest top that we had, and we had a reversal. If we take that, the golden zone is sitting here at 20k, and also that golden zone is within my major support trend line. So I'm just wondering and said, okay, is it going to do the same thing again? Maybe there is a possibility of that happening. So I am still bullish on Bitcoin. We are still bullish because it's holding that trend line. Right now, the question is, this is a bullish momentum since 15k. Are we going to lose that? Let's say recent trend line since 15k. Is it going to lose it to come down to this golden zone? Which again, we are still bullish. Remember that when a coin is an uptrend, what it's going to do? It's going to start from a point, goes up, give you one wave. And then it's going to come back to the golden zone and then continue. That is a bullish momentum. This is a bullish pattern. It's an uptrend. So even if Bitcoin is going to lose the first trend line, which is a very steep one since 15k, and then it's going to come down and not retest, but let's say reclaim these levels, the golden zone, and then goes up again, we are still bullish. You cannot say, oh, we are bearish. No, we are not bearish. Even if it comes down all the way down to 20k and people will start panicking, oh, it's going down and things like that, still bullish. You're going to be bearish only and if you're going to lose that support trend line. If it's going to break it, retest it, and it goes down, then you're going to say, okay, you know what? It's like, okay, this is like 100% bearish. It lost that bullish momentum. That uptrend now is turned to downtrend, because up to here it's correction. It can bounce off. That is a correction move. If it loses that and goes further down, okay, now you're talking that it's not a correction anymore. It's not a retracement. It's going down, crashing down, right? So don't panic. That's why I did the video on Wednesday, and I put it up on YouTube for you to see, to tell you, do you FOMO on the trade? So you still feel FOMO and fear and FUD, FUD means fear, uncertainty, and doubt. So I want you to see the big picture on the daily. Go back on the daily and see what's going on. We're still bullish on Bitcoin, even if it loses that trend line, even if it goes down and touches that trend line, we're still bullish. So don't panic, just prepare yourselves. Now, it may bounce off from here. That will be good for you, let's say, to build some small positions on spot, or you can do some leverage to make some money, as long it comes to the same levels, so to say. You have another push, and then maybe it's going to come back later. If and when and if it's going to lose that trend line, then you said, okay, if it's not a fake out to the downside, and you get a confirmation that it's going to go down, then you know that you have one target. So you say, okay, spot stays as it is. I'm going to do leverage a little bit to the downside. Well, I'm not going to gain a lot on the downside, but I'm going to gain some money. And then these profits, you're going to DCA your spot positions. You're going to buy again here in spot, and you're going to DCA. First entry up there, second entry up there. If you put the same amount, not the same value, the same amount of these tokens that you bought in spot, you're going to go halfway down. So your entry will be down here. The update, let's put an 8 here, right? That will be your update level. That was your first level, your first entry, second entry, and that will be your average entry. And that's what we call DCA. So you're always building. If you're gonna put not the same amount, but you're gonna double the amount, so let's say you're gonna go triple. So let's say that your spot position was 100, the amount of tokens that you got was 100 tokens up here, and you come down here and you say, this time I'm gonna buy another 200, that equals to 300, yeah? Your entry will be DCA around 66%. It will come even lower, right? So you can always have plans how to make better entries on your spot. And why do I say that? Because we don't predict the market, and we don't know if that is gonna play. So you want to enter on a key level, and you don't go heavy, but you just get your position. If you didn't manage to get on the 15k, or if you didn't manage to get on 20k and you didn't manage to get on 25k, make sure that you get some on that trend line. Now, you guarantee a position, an entry. It's fine. And guys, it's really fine. I'll tell you where my entries, guys, were up here. Around 50k. So if you enter here now, 25k, you're good. You're still good. You're far better than me, right? And if it goes down, good news. Don't panic. Don't be devastated, and don't be sad, or don't get depressed. Oh shit! I bought something on the spot, and I put some money there, and since I entered, that goes down. Don't panic. Let it come down, and try to enter again as low as possible. Don't try to enter now in the middle of nowhere, like around these levels. Don't try to enter DCA here or there. Try to get as lowest as possible. Get close to that trend line. If it touches that trend line and then consolidates a little bit, it's okay, fine. New entry. I'm going to add up to that. And then you're going to decide, how many tokens do I have? 100, for example. Okay, I got 100 tokens of this price here, right? Or this price here, sorry, 30k, let's say. Now, when it's going to come down to 20k, it means it's cheaper for you. So it's going to cost you less to buy exactly the same amount of 100 tokens. So you're in discount. And say, okay, you know what? I have the money on the bank that I can double that or triple that. Because it's cheaper anyway, it's going to cost me less. So if you double that or triple that, that will bring your average even further down to the new entry. And what's the good news about it? If you bring the average down here, that means when Bitcoin and all the coins are starting picking up, from this point onwards, you're going to be in profit. And here, you're going to be in profit when that was your original initial entry. You're going to be in profit, not break even. That's the magic about it. Right? And not only that, you increase your size. You're going to be in profit from this point onwards with 300 tokens size. So you increase your size. So if I had 5% move to the app from here to there, let's say this is 5%, right? This is 5%, my drawing is terrible with my mouse. And then you get another 5% move, right? So you got the same range, 5%. You're gonna make more money because your size is increased. Good evening, Sax. Good evening, Sarah. How you all doing? Right? So you always have, not a backup plan, but you always have ways to invade the market, not to psychologically treat you and trick you as well. Alright, let me clear all these Picasso drawings here. Remove the noise. Try to remove the noise. That's why I gave you the 3-day MA, right? Because it has less noise. It is less likely to give you a false signal. That's what I'm trying to show you and see the bigger picture, and don't panic. Have plans. What if it's gonna bounce? What I'm gonna do? Buy some position, and the good thing about it is that you don't buy in the middle of nowhere. You bought it on the trend line, and that's good, right? If you're gonna lose it, okay, don't panic, don't sell it, don't go crazy about it. Do the leverage to the downside. From here to there, let's say to the golden zone, roughly average is 30% down. Now on the way up from this level to go back to that trend line, even on the same level, is 43%. So on the down is 30, on the way up is 40. And if that trend line carries on, let's say that trend line carries on the same level, right, on the same angle, and if you target that trend line up there from the same level, yeah, from the golden zone, if you go up, it's 100% up. Yeah. So think about it and don't panic. Always have plans. I do not enter in the middle of nowhere. Go for it, Missy.
Sorry, it's just I've got to go in 10 minutes, that's all.
Okay, go.
Basically, I was trying to look at doing a trade on a Bitcoin.
Right.
And everything's, I've tried to do what Sheldon said with the four-step thing, but it's still confusing me, and I just can't get my head around it. And also, there's the other thing where when obviously a coin's going up and then it's having a pullback, at what point would you think, right, this is no, because obviously it's still having lower lows and lower highs, so in the pullback. So at what point do you think, right, well, it's changed now, I'm getting stuck on that as well, because obviously it is still getting a lower low and a lower high, so I'm still thinking, well, you know, so it could potentially still go back and change structure, but I'm just stuck as to where, at what point you know the difference.
Okay, so you're stuck in because you don't know in which direction we'll go. Is that that's the trouble that's giving you?
Well, basically, I'm thinking. Well, this, I suppose I'm asking two questions really. Basically, when it's having a pullback, say you're putting your fib on, and you put your Fibonacci on, and you're wanting it to come back to, or you're expecting it to come back to golden zone.
Right.
Well, in that time, made lower lows and lower highs in it to do that. So obviously, but then also we're told, like, if it's making a lower low and a lower high, it's a change of structure. So I'm it's confusing me. That's all that part of it. At what point is it just a pullback on, And I mean, I'm assuming that once it's got past the golden zone, then it's obviously no longer
okay. I see. Okay, there's two. Let's say that you're trying to apply two techniques at the same time, and that will give you a little bit of confusion. Now, either you're going to do horizontal microstructure, and then you're going to target horizontal levels, or you're going to go with trend lines and Fibonacci's. And why do I say that, guys? Because microstructure, the people that they do, they call it, I call it microstructure, other people they call it ICT, other people call it SMC. It's all the same thing. It's microstructure, yeah, price action microstructure. So if you do horizontals, microstructure will say to you, this is my lowest point and this is my highest point. And they call it, sorry, wrong point there. And they call them, let's give you names as well. They call them swing highs. So this is your swing high and this is your swing low. And they see horizontals only, right? This is your low and this is your high. And after that, what they do, they follow. I mean, this is the bottom of the range, this is the top of the range. And what do they see? They see the lowest points on the inner structure. And I say to you, listen, for me, it's going down because this is the lowest point. It's trying to push up, which is a lower high, and then it's giving me at a low. So to stop here, what do you see? You see that you got a break of structure, right? Why? Yeah. Because that price action, that wave went lower from the previous. So, AKA, lower high, and then it's printing a lower low. You see, they don't go diagonal, they go horizontal. So let's put that back there now. And then what happens? It carries on to give you even say a new high there, and then another push down, and then another push up. Okay, what do we see here now? You've got a continuation, right? Let's put that here together. So you've got the first, like, the break of structure. You see that, and that is a continuation. So okay, cool. And then you get another break of structure, horizontals. That's okay. You broke it. You carry on, and then what happens? It goes push all the way up, and then they get the change of character. This is TC now. TC to the upside, right? And what is TC to the upside? Trade change. That is the first indication that it wants to stop going down. It doesn't give, it breaks all these down movement, and now it's giving you a new high, right? And I was like, okay, you gave me an indication now, because it was coming down, up, down, and then boom, it goes up. That is this one here, the TC, the trend change. Other people call it choke, other people call it shift. Whatever you want to call it, use a term that makes sense to your brain. Yes, and then that was the first indication that, oh, hold on a minute. Now that down movement is changing, is shifting. And then it came down again, gave you equal low, and we call it EQ, or you want to call it EQL, EQ low. And then what it did, pushed it on the upside even higher. So what it did, it came down a little bit, and then it goes up again. So this time you have a continuation to the upside, and this one is SB, structure break. Other people call it pause, break of structure, right? So this is the first indication that you want to change around, right? So this time now that down move, it goes to the up, right? No problem. And then you've got a continuation. Okay, do we know what do we expect after that? Remember that if you get an indication that it wants to turn around, now you want to see an ABC pattern. You want to see an ABC pattern to the downside, to the same level, to these levels here, right? And if you see an ABC pattern coming down, that is like a confirmation of that trend change. The ABC pattern after a TC an SB after a choke, after a pause, if you get an ABC to the downside to the same levels when these happen here, so let's put that C in a nice manner inside this level, that is an order block. Now we go to the interesting stuff. Let's mark this as an order block. This is order block here that is going to get confirmed that it wants to push to the upside. So if I get an ABC on this level here, that it happens to be my trail line as well, which is a key level, then I get a confirmation of that shift. And I say, okay, hold on a minute, we are going up. When and if that plays out. So if you take that kind of strategy like microstructure, you're looking for lower highs, lower lows, lower highs, lower lows, and then you got a shift, you got a high. All right, okay, we got a shift. Yes, that's why you mark it as trend change or choke, and then you and this is you're getting a following of a higher low, and I said, okay, I got a high, I got a high low, which is 2 indications here. That is a first indication, small confirmation, half confirmation that maybe we shifted. When you get a second pair, this is your first pair, high, low, and then you get a second pair of high, low, and this is like, okay, this is a confirmation now that it wants to go up. And what it does,
I'd have been stuck with that because I'd have thought, oh, it's coming back down again, and obviously, and so and yet that's a confirmation. So is the name for that structure?
I know. I mean, people. I know it's confusing. I understand you completely, 100%. I'm with you. And this is when the people see that it's going down, like the ABC pattern, they fail to recognize it as a confirmation, as a retest.
Yeah, definitely.
And they see it as going down, and what they do, they go short, and this is where they get trapped.
Yeah.
This is where they get trapped because they see it going short, they go short, they go entry short, and what it does, it confirms and it pushes to the up, and this is when people get in trouble.
And I think this is what's so confusing for people because obviously you're trying to follow pretty much 1, 2, 3, 4 and follow the rules, but you know these sort of things throw a spanner in works, and then your mind can't. You think, well, how can that be? So is this structure got a particular name? This way of doing it with
market structure. It's market structure. It's market
just
structure.
Market structure.
Yeah, and you can see you have a lot of YouTubers out there that they kind of call it SMC, smart money concept, right? LuxAlgo that a lot of the OGs and mentors are using is based on that market structure, that smart money concept, right?
So you wouldn't use a fib with that then? So that's why I'm getting confused.
I do stick to it. I love market structure because I'm an horizontal guy. I love horizontal levels. I see the price as horizontal level, right? And this is one price, and this is another price, and this is another price. So I see market as horizontal levels. This is the level of 27.5, this is the level of 28.2, and this is the level of 28.5. So to my brain, because I'm stupid, right? To me, my eyes, I see horizontals. Other people say, I like to do diagonals. Fine, no problem. Seldom doing diagonals and support and resistance.
So basically what I'm doing is mixing up two things. So if I was to put a fib on that now, I would be expecting that to come down.
That's the one. You got it. Now what happened is you got all mixed up because you are combining two strategies.
And that don't work together.
Exactly. And sometimes can happen to be aligned, both strategies, to indicate you two things. Like, one strategy is telling me bullish, the other strategy is telling me bullish, and it happens to be aligned, and then you think it's okay. Oh, it works. If I do A and B, it works. And then later it can happen not to be aligned. A diagonal may give you like a different aspect. I mean, it will not happen very often. I want to be honest and clear about this, because I want to make sure that you understand that these two strategies, the Seldon strategy, the school strategy, and the market structure strategy, are kind of aligned, right? And I explain to you why. School now, with Seldon lessons, they try to give the easiest way for people to understand how to see the charts. The easiest, the very basic, easiest. Now, what do we learn? We learn to do trend lines, right? And this is the basic stuff. And the Fibonacci, no problem. Now, why is that? Because they're trying to teach you patience for you to not to take any action unless that trend line gets broken. Technically, if you zoom in and see, okay, when do I get that break of trend line? Let's put a path, and let's say it's going down, goes up to that trend line, and then it goes down, and then it goes up to the trend line, and it goes down, and then you see what happened. It gave me equal low, all right, and then what happens? Break of the trend line is giving you a new high. All right, come down for retest. What does it give you? It gives you a high low, and then a continuation to the up, and this is when they tell you enter. So technically, what are they teaching you? Market structure. But not with advanced techniques. They're trying to make it as basic as possible. So a trend line will give you, it will build, within you, it will build the patience for you to say, wait, I need to wait until when and if the price is going to break it. But technically, when it's going to break it, it's giving you the first pair of a higher high and a higher low, and then the retest when it comes down is giving you the second pair of the high high and the high low, which is a confirmation. And Seldon is teaching you entry on a retest. It means it's not a fake out. So in basic terms, it's like trend line break, retest, I enter. Advanced is like, okay, I've got a high high, got a high low 2 times, I break the structure, I got a continuation, then I'll expect an ABC pattern to come down to retest and then go. And that is another block. Now, if you come here on day 1, and I'm talking about all the blocks, high highs and high lows, you're all going to be like confused and say, okay, hold on a minute, what is this? I don't understand. I don't know what the trend line is. I don't know what candlesticks is. I don't know the patterns. And you're talking about all the blocks. How the hell I'm going to digest all this?
Yeah. Oh, yeah. I basically I tried to do that fall structure on the Bitcoin pair, and basically I was getting obviously the stochastic didn't want at the right area. I didn't think. Well, it was on 4 hour.
Let's have a look. Okay. Well, this Bitcoin is in the middle of nowhere. What pair were we looking at?
It was BAKE.
BIG?
No, BAKE. BAKE.
Bake. Okay, Bake. And guess who?
USD. Sorry, BTC.
BTC. Okay, cool. Right. Okay, let's have a look. Oh, hello. 4 hour. You saw the stochastic RSI on the 4 hour. Oh, this is weekly. Let me fix that.
I was trying to look. I was looking more at 1 hour, but then it like had probably an head and shoulders, and I was thinking, well, that might come back down, and so there were so many conflicting things that it just again blagged me head.
Right, yeah. I mean, guys, it's not always. Microstructure is a little bit more technical, and it takes more time for you to apply on the charts, right? When you see, when I open this is the very first time I open Bake and BTC. So the first thing what I do is, I'll do a trend line. It's fine because I want to see the peaks, and then I saw the break of structure. Really, I mean, this is what happened. This is a break of structure, and I need to I need to see on the smaller time frames, because when I see the 4 hour as overview, and then if I want to apply my microstructure, I'll do it in the 15 minutes, so I can see more candles. But that takes time for you to apply the strategy. But if you want to quicker see something, do the trend lines. It takes less time and less hassle for you to do that. Stochastic RSI was at the bottom here. Okay, you got a stochastic RSI bottom here, and you got another stochastic RSI at the bottom, these levels. All right, so that was your first trigger, that you got the stochastic RSI sitting at the bottom, and then you have to wait the break of that trend line, and you got that break of trend line, but you never got retested. So you're still expecting to come down and retest this level.
So, does that look like an head and shoulders then? Because I was thinking it looked like an head and shoulders, and that would come back down to that line, to that, such as that trend line,
for you to get a head or shoulders. Let me see if I can. I'll do the path tool. For you to get the head or shoulders, right, let's put that, and then let's come to these levels, and then come to these levels that way. The reason I designed that way, yes, it can happen, and the same thing on the way down as well. We'll do 2 examples. You go these, and then it's coming down to these, and then you get a higher, which is the head, and then it's coming down a bit lower, and then it goes up again, and then it goes down. The reason I designed this way is I want to show you something. This is an uptrend head or shoulder. Let's make it a bit thicker and white. This is the base, right? They call it the neckline. And the same thing applies on the way down, right? You need to make sure that you have common touches on the neckline for you to say it's a head and shoulders, right? So make sure that you have common ground for you to say that I have a neckline. If you don't have a neckline somewhere, it's very difficult for you to get the head and shoulders.
I'm looking at the one above the trend line.
That one, this one there?
Yeah.
Okay, let's go down to 1 hour and let's see if we can form it. So that will be the neckline?
Yeah.
Okay, so that will be the left shoulder, correct? That will be the head, right? So you're waiting now to play.
See if it forms a right
you
shoulder.
want something like this for you to say this is the right shoulder, right? It could.
Yeah.
It could, but you need to wait that right shoulder to play out, and then make sure that you don't lose that neckline. Yes, it's very important. This one did not come very close to the neckline.
No.
Yeah, so this is like question yourself.
Oh, right. But that's more of a confirmation if that came closer to the neckline than that bit.
Yeah. So you're like questioning yourself: is this valid? I mean, will that play out? Maybe.
You see,
maybe
what
not.
I didn't realise, I thought it was a long ways as a horizontal as opposed to a diagonal one. Neckline. I didn't realise that you do it on that angle.
You have to. It doesn't matter the angle.
That makes more sense, but clearly it's just little things like that make all the difference, knowing these little bits, because it throws the whole lot out otherwise.
True. I think there is a tool somewhere, the head and shoulders, here it is, head and shoulders. Let me bring that up here, head and shoulders. For you, let's say this is a left shoulder, and then that comes down, and then you have to print the head. And you see now that after that I print the head, it's giving you the neckline. If the neckline is not aligned, that triangle here, it's not, let's say it has no background. And if we get an aligned, the first triangle gets a background. You see?
Oh, right. Oh, that's good, yeah.
That's good. So that means you have common ground. That means, okay,
let's
go for another one. And now that triangle, it has no background. So let's say the first part is confirmed, the second part is confirmed. Now, if I go to here and stop there, you see it's not confirmed. It is not like it's not really valid. It will not play out. But if I pull that down to that neckline, voila, you've got 3 triangles now with a background, and that means it's confirmed. Most likely, it's going to play.
Yeah, that's what. Wow, that's really good. I obviously I didn't even know that existed, so that
There you are.
that a lot of strengths as well. That's so helpful. Dale, I'm going to have to go because I've got an appointment. But when are you on next?
Friday.
Friday.
I'll try to make it routine for everyone now, and it's going to be Monday, Wednesday, and Friday. Right.
Lovely. That's good. Right. Well, thank you so much for your help.
You're more than welcome. You're more than welcome. I'm glad that I helped.
I've got loads and loads of questions.
I'll come back on Friday.
I will, definitely. Right. Thank you so much.
Have a good day. Have a good day.
You too. I really appreciate it. Thank you so much. Bye.
You're welcome.
Take care.
Bye.
Bye.
Right, guys. So yeah, you need to separate the strategies. You need to follow one strategy. All you need is just one strategy, and get good at it. Would you like to stick to Sheldon strategy, like what we learned on school, like the basic stuff? Is absolutely fine. You can do that. Would you want to get more adventurous and you want to do a little bit microstructure and more technical, to get a little bit insight on the TA as well and learn and master microstructure? You can do that too. But stick to one strategy. You can test any strategy you like, as many as you like. I have no problem, no objection. No, I mean, it's not because we are here in crypto school and right now we're teaching Sheldon strategy. That doesn't mean that you're not allowed to try other things. Of course, you are allowed to do anything you like. You need to find a strategy that works. But Sheldon and the sniper team, they've been around in trading far longer than us, and they came up with that solution. So, in a sense, we don't need to go and reinvent the wheel. We have the strategy. Now we need to understand it and keep it. Now, if you want to get more technical and trying to look what Carl's doing, Carl is like more advanced, so to say, yeah? Carl is, let's say Carl, he was there to give you all the information, all the shows, to teach you. Well, it wasn't teaching you, but it was giving you the market overview. And he was applying more advanced techniques, which is microstructure. And clearly, lately, you can see it more clearly on his videos. While the team and Sheldon, the sniper team, they give you the sniper strategy, which is more basic, yes, but it's more like they cut down all the noise and they're trying to give you the basics and the clearly understanding with trend lines and support resistance. And that's why they're charting. If you see Dylan, OG Dylan, and Greg, they have very nice and clean charts. Why is that? Sorry, I need to have a sip of water. Excuse me. So, they're trying to make it as simple as possible, and the charts are very clean. Market character. That's interesting. This is the first time I hear about that. Market structure is basically the structure of the price action. Now, market character, is that change of character you're talking about? Are you referring to the change of character, the chalk? Excuse me, guys. Yes, change of character. Okay, good. Change of character is a term within the market structure. Market structure is the strategy, how you apply the things, and change of character is within. Yeah, it's part of it. Right. Let me see. Someone was asking about the YouTube. I have the playlist for you. Right, the playlist that you see all these coffee charts and chats that I have with you, I recording them and then I post them up on YouTube, and that is under that playlist. it's only it's hidden. That playlist is only available for the people that are here and they're getting that link, right? Now, if you want to just follow my channel on YouTube, which I'm going to do some other videos, which is going to be public, you're more than welcome. You can follow the channel. So I keep these two links for you to, because the YouTube as a channel, you cannot see the hidden playlist. Yeah, people will see 1 or 2 videos and say, oh, he has nothing. But if you have the other link, the playlist, you're going to see like 12, 13 of them. I've got them up for you. Right, now change of character is basically what I call TC, which is trend change. From uptrend it goes to the downtrend, and from downtrend it goes to the uptrend. So this is trend change or change of character. Why? It changed the character. It was going down and now it's going up, so it's changing character. Simple terms. Right, let me see on the chart that I don't miss anyone. Stacks, you went short on H-bar. Well done, very smart. After that huge pump, of course you're going to go short on H-bar. Well done. AVAX, long. Okay, you got long, I believe, because of that call that we had with the OGs, that, AVAX has been boring for a very, very long time. It's accumulating. It's stuck on the horizontal. Most likely, it was looking to go up because the rest of the coins were popping. But okay, you have one short that goes well, and you have AVAX long. Okay, rune short but still early. Okay, good. Guys, when you are not, let's say, certain, or you are not convinced to get into a trade, instead of going 10x, right? Now let's say you want to get here, right? And you put the stop loss very tight. Something ridiculous like this, so to say, on the lowest low. If you break this low and you give me a low, that is invalid. My long position, my long entry, my long thesis is invalid. So you have, let's say, a 0.3 stop loss, and let's say that your stop loss either way is going to cost you, I don't know, let's put random numbers, it's going to cost you $50, your stop loss, right? So instead of going 10x, what you can do, right, you can do one idea. So I go with plan B and I go 5x, but instead of 0.3 stop loss, I'll go with 0.6, right? What have you done? You have doubled the percentage of your stop loss. But because you divided your leverage from 10x to 5x, you increase your stop loss as a range. You double the range. Again, you're going to lose $50. Right? So, why do you do that? That could be one method to counterattack the wicks. When the price is going up and then goes something like that and goes up and then goes some of the wicks and then goes up. When you have a very tight stop loss, so to say, the first time you're okay, the second time maybe you got wicked out and you got stopped out and you lose the $50 on that level, on that previous stop loss. If you go 5x this time and you double the stop loss, you may survive this liquidity grab. This is the stop loss hunting or stop hunting, what you want to call it, manipulation, and you can survive that week. And then when and if you get that break and retest, right, and you want to go further up, then you can increase your leverage and then say, you know what, I'm out of the danger zone, I'm above my entry, I'm in profit now. From 5x I can do 10x and my stop loss could be at break even. And that means you're out of danger of stopping out of these liquidity hands, and then you go up with them, and every time you got a retest and then goes away, every time after the retest, after that is pulling away, right, you can increase the leverage. the compound method. But before you do the compound method, try to minimize your risk by going less leverage and increase the range of your stop loss. It's going to cost you the same thing either way. $50, right? That's a little bit an idea for you to think about it and try to see if it works for you. A lot of people, they're having a very hard time when they enter a trade. This is the hardest moment for you to enter a trade. This is the hardest for you to enter a trade. If I enter a trade, will it go? Will it get there? Will I lose? What happened? I got stopped out. This is the hardest. Once it's going, there's no problem. You are good to go. So you can, when you get more confident that the market is playing along with you and you're survive of that liquidity crap, then you can increase the leverage and update your stop loss and carry on in a good direction. So let me know, have a try, and come back on Friday or next week and let me know if that helped you at all. What happened with BitGet? What issues? All right, let me see about other questions here. Guys, if you want to come up on the stage and say hi, you're more than welcome. Yeah, don't be shy. Come and talk to me. The 3-day MA, okay. Guys, I use one single indicator, yeah, and I use the indicator MA cross. Why is that? Because it's one single indicator that has 2 MAs. I don't need more than 2 MAs. That is me. If you want have multiple MAs, that's fine. I think there is another indicator called MA ribbon, something like that. That has like, I don't know, 5 or 6 MAs, but it's too much noise for me. It's too hectic for me. As I said to you before, I'm stupid, yeah? So the less I have, the less noise, the more focused I can stay. So 50 is the first one, 200 is the second one, right? And the time frame is 3 days. This is where I lock the MA to be stuck on 3 days. You can do it on the daily. You can do it on a weekly. It's up to you. I do 3 days, right? Now, the benefit of that, why I use 3 days, is because that MA has a wider data range on the charts, right? And it takes a lot of data to produce a value. And that will give you all indicators, majority of the indicators are lagging indicators. They need to calculate past data for you to give you a value. So we all know that all the indicators are lagging indicators. So even if you understand that using 3-day MA, you can understand that it's quite heavy data that is looking at. But if it's going to flash you a signal, it's more likely to be more accurate because it has less noise. Now, how I use that 3MA to my benefit is I use the let's go back to the daily so you can see more data here. What I like, clear the noise. That's noise. Bye bye, see you later. What I like to, and let's make it a bit thicker for you to see as well. Let's make it a bit thicker. Number 2 and number 2. Here you are. Now it's more thicker so you can see. What I like to use the MAs as dynamic support and resistance areas. So I have this 50 turning around because of the 15k move, yeah, when Bitcoin was 15 and started move. Then the 50 MA started around and turned, and it acted as my support. Fake out support, it came out, reclaim it, and maybe most likely it's going to do the same thing here. So I like that my trend line that I draw it since 15k, and then when I got the second point on a few months later, then I could draw that trend line. I see now that AMA agrees with me and is acting as my support, right? And it's dynamic because it's moving. Yes, it's updating and it's moving. This one, that trend line of mine is very static. Yeah, I'm just pointing the dots. I target the dots and here he goes. But MA is dynamically updating. So this is the one benefit. The second benefit is because it's too slow, has less noise. So when it's flashing something, the cross, it's just gonna be more like accurate, more valid. If you use a daily, another thing for you to compare, if you use a daily, input 1D, right? You get the cross a little bit earlier, right? And here it is. Let me mark it. Okay. And then I got the 200 MA acting as my dynamic support, right? Now, when price is above MAs, all good. When it's breaking the MA, it's like, and now it's acting as resistance and kicked out. It went close to the 200 MA and then shift up, break up, and then people got excited, and then it goes down again, rejecting again, and you're like, again, okay, what's going on? Right? You can use a daily, you can use a 3 day, it's fine. Now, if you want to observe and say, when was the last time I had the golden cross on the daily? It was back then. That was the first recent golden zone, the recent from our time, and this is the second recent golden zone, which goes all the way back September 21. And what happened? The price went all the way up. So while the price action is above the MA, everything is good. When it's breaking, it's like trouble. And it came down, tried to come up, it was acting as resistance, came down, tried to come up as a resistance, and then finally lost it, and lost the 200 MA as well. Right, trying to reclaim it. A lot of people say, okay, maybe it's going to reclaim it when it was going to go up. Yeah, like this. If it's going to break the 2 MAs, that would be the scenario, but it didn't happen. It came down again, and after that, it was acting like support and resistance. Yeah. Support, resistance, resistance, support, resistance, reclaim, not really support, lost it again. So MAs, the heavier they are, the better they are for you to do your TA, and it's acting as dynamically support or resistance levels. I like the 3 day. I can shift like between 1 day and 3 days. You can do that as well. Yeah. But 3 day, when you get a signal, a flash indication, it's more valid. When was the last time the cross happened? All the way back in 2019. Since then, it never happened again. So you cannot ignore it. Here it is. August 19. July. Yeah, July 19. And when the happened, our cross happened July 23. You see, again, summertime, same period. So, you cannot ignore these facts. You don't go crazy. You see them and say, okay, maybe there is a possibility that you're going to do the same thing. Yeah. So that's why I said to you guys, try to find things that do not panic you. We are still bullish on Bitcoin. Bitcoin's still looking good. Yeah. It's not crashing. It's not broken. Markets go up and down all the time. Right, Pro Habitat, UK. I believe you're from UK. Good morning to you. How you doing?
How you doing?
I'm good.
Right?
I'm alright.
Nice. Yeah, no, I had a question. I had a question. I posted it. It's basically like, I just wanted to know what these abbreviations sort of mean. I know obviously EQH would mean obviously
equal high.
Equal high.
Right.
Yeah. Then obviously. What does the BOS and the MSS and an MSS plus?
All right. Okay. You'll find an indicator. You see. Now we come to different terminologies here now, and people are getting confusing. When you see BOS, we call it BOS, with one S, yeah, and it's break of structure. And basically, the break of structure is a continuation of the previous action. So it was a downtrend, and then when you get the break of structure, it's telling you that, oh, okay, you know what? I'm going to repeat the same thing. So it's a continuation. So if I was a downtrend,
is that because of is that because, like, obviously, like, if you look at the left side of the screenshot that I posted, yeah, like,
yep,
you've got
I do.
the break of structure right at the bottom, and then you've got your long green, like, well, you've got a long green wick going down, and
Right.
then you've got a slight little area where it goes up, and then you get an equal high, and then it comes down, and
Yep.
then basically the BOS, would that pop up because there is a green candle going down, and then you had and then on the right hand side of that you had a really long sort of red candle coming down, but not quite enough, if you know what I mean.
Okay.
So then some of the green candle is still showing, if you know what I mean. So then that causes a break of structure. Is that right?
A little bit. It is right, but that indicator will give you a little bit trouble, a little bit confusing. Now, let me clear the terminologies of that indicator. Is telling you the MSS, if I was correcting.
Yeah.
And that is equal to market structure shift. You see, other people call it shift. Other people, for exactly the same thing, they call it chalk, which equals change of character.
Okay,
right?
makes sense.
I call it TC. You see, I'm stupid. Train change. I'm trying to find terms to be more understandable and more clear. Now, the reason that I use TC is I like to have as many characters on my chart because it can't be very tight spots when I'm trying to do this, stuff like this. So let me find an example for you. So that is a down move. This is a 4 hour. Let's go to the 4 hours to give more definition. So let's do a little bit more practice, right? That was uptrend, no problem. That was an uptrend. That was the highest point, and then after that, you got that. Let's make it bigger for you to see, right? And you got this high here, right? And then that was before that high. You need to identify where is that the latest low before that high happened, and that was a low here, right? So okay, I see you. And what happened? You got a price action that went lower of this horizontal level. And now because of this, that was an uptrend, and this is the first time that it breaks below, and it's the first time. So on the first time, we call it TC to the downside. TC to the downside. And because it's very, very narrow, this area, I cannot have a sentence to identify that is a downtrend, right? A change in character, or a chalk, or MSA. So I'm sorting it and I say TC trend change on a 4 hour to the down. I use like numbers and symbols as, you know, to make things more simpler. Now after that, if you get a repetition, and you get this is a new low, a new high, and then it repeats itself, that is going lower. So that was my last lower point of this high. The previous low was this one here, and what happened? It came down and it break it. So okay, now this time I call it SB. Structure break.
Because you didn't get a higher low. Because you didn't get a higher low.
Exactly,
So
I got a lower low.
Yeah.
Right? Now, two conditions. When you do the TC chalk or whatever, hi, go, good morning, you need to have one condition. You can start with a wick, but you need a body to break that previous level. A body. You need a body, not a wick, for you to say that you can confirm and call it a TC. If it was a wick, you do not confirm this. Say, no, I need a body that's going to break my previous horizontal. It has to be a body.
And that would probably indicate, because it's not a wick, it's probably indicating that it's got more down pressure, like
right,
obviously more
because
pressure,
because the price
it's not
closed
off.
under it. It means that it was more certain that the price, because it closed under that level, so it's like more valid. It's not a fake out. It's not a wick that was above. It went down for a little bit and then it goes up again and said, okay, you know what? Yeah, it was a little bit fake out there. It is not confirmed because the price did not close below that level. So for you to,
it was more of a stop hunt.
Right, exactly. So for you to confirm, to qualify, so to say, that is a TC, you need a body. However, on SB or BOS record structure, you can start with a wick, and wick it's okay. Why? Because SB actually is a continuation from TC. So SB's BOS can be from wick to wick, no problem, but not the TC. Right? Now it comes down, push up a little bit, comes down, push up a little bit, comes down, push up a little bit, comes down. So if I was down on the 15-minute, I'll keep on getting continuations. This is the lowest point. I got the break of that, and mind you, I am on the 4-hour. I get that, right? And then you get these equal lows. And let me bring a line here, and that was the last point, and you see that I get equal lows. Everything is equal here. So okay, what's going on here now? So this is SB. I can classify that as an SB. SB
so
to the down. Well, it's consolidation, right? Someone asked yesterday, can I have a market structure happening while consolidating? When it's going sideways, do I get SBs and TCs? You can have on inner time frame, we'll call them inner structure. Yeah, this is fractal. Yeah, you go from 4 hours, you go to 15, and then all these you may find inside some TCs and DCs, but really on sideways you get nothing until what? Until you break two levels, the highest level and the lowest level. So far I got nothing. It's a wick. All right, and then what happened? Boom, the price went up. So okay, hold on a minute. Hello there, I see you. So this is the very first time that we get, and it's very tricky. You can see that it's the price closed just above, very, very, very slight tricky thing. And I said, okay, you know what? This is the very first time now that we have a trend change to the up, because so far we were going down. Since then, we're going down. Now this is the first time, the first indication that we want to go up. So here's your trend change, right? I said, okay, cool. A body, not a very solid confirmation because the price action is just barely above that level. But hey, it's a body. You cannot ignore it, right? It goes all the way up and then massively goes down. But again, it did not break that level. Okay, goes down and then it tries to go up, roughly doesn't manage it. And what do you have here? You got equal, I got equal EQ, you got equals. It cannot pass this level. And this is like a time for you to say, okay, what are you doing? Right, what are you doing? You cannot pass these previous levels. So
basically it's kind of showing you that you're hitting resistance there.
Yes, and you know that is weak. You have no pressure. I say, okay, and that was my highest point. That's the lowest, high, low, high. So my latest low point from this high in these lows here, or even that one, even better that one. It's fine. Yes, low, high, because you need to see it as waves. So that is my lowest point. Okay, cool. So what did I get? I get this time on that low, I brought it to the downside. I said, okay, hello there. Now you are a new TC to the downside, right? It never happened to give you another BOS or SB after that TC. So you never got a confirmation of that trend change. You tried to push up, but you never got another SB. You never got another continuation, like a confirmation. You didn't. You got instead a new TC to the downside. So that TC is telling you, you know what? That is cancelled. You're not going nowhere. Yeah.
Right.
I said, okay, good. It goes down, goes up, goes down. I said, okay. I got a small SB here, and then it's trying to turn around. And what happened? It gives you another, well, all the way down here, it's giving you another TC to the up, right?
Oh, right.
All these price actions did not close above, no bodies, just wicks, doesn't mean anything. That body, however, it means a lot. I said, okay, this is TC to the upside now. I said, okay, you know what? This is cancelled now. You don't want to go down, right? So, okay, cool. It's pushing to the up, comes down again, and it goes up again. All right, so this time I got, let me grab the tool. So this time now I got an SB, right? You got an SB. TC, SB, confirmation to the upside. It's an uptrend. You can see that, yeah? It's going up. Here it is, going up. Cool, it's good stuff. And then you got another SB from here, from this point to this point, right? So, okay, so far it's looking good. Everything's looking good. Until when? Until you get a new low, which is low under this low. I mean, this is a wave. It's an up. That's another wave. That's an up. So that low got broken, right? I said, okay, let's remove that noise. Let's remove that noise there. So I get what? A TC to the down because I got a body. And it's a change.
And also it looks like a weekend trap.
It could be. But also you got, the reason that I did that trend line is for you to understand that you got the break of the trend line. That's what's TC, right? And then it goes up and is failing to give you a high. And then what do you get? You get an SB to the down. And you get SB to the down. SB to the down. It's a continuation. So that TC now is confirmed. Yeah. And because you got two SBs, you got to confirm from this TC. So from this, from this low all the way up here was confirmed. It was a confirmed wave. So you see, I mean, microstructure, it's a little bit more study that you have to do, right? I gave an example on a 4 hour, but you do that on the 15, right? You do it on the 15 because you need to see where are you going to enter to a trade. How does that help you to enter a trade? But firstly, we just spoke about microstructure, about the terms that on your indicator that you had there. What was it? Where did I put it? Okay, it's gone. Okay, no worries. All right. Did I delete it? Probably most likely I deleted it. Anyway, so you've got the term of MSS, which is microstructure shift, or you have the term of choke, or you have my term, which is TC. And this is microstructure. You need to identify the microstructure of what it's doing. It is a little bit more study, right? It is not as simple as trend line, support and resistance, blah, blah, blah. You need to do more work to understand what price action is doing. And that's why I like to study. I like to do this, right?
Yeah, like me too. Like I don't know if I'm a bit like OCD or whatever, but like I need to like.
You can call me I'm autistic. It's not a problem. I'm autistic. I'm stupid. I mean, so what? I don't like trend lines. I like microstructure. You need to find something that aligns with you. Yeah, you need to find something you understand. And not like horizontal levels. I understand horizontal levels because prices are horizontal levels anyway. So I say, okay, I do this. I need to do more study. I need to spend more time on the charts. Okay, so what? I like it. I mean, I have time to spend on the charts anyway. I need to understand the habit of that token that I'm looking at. And now I'm looking at Bitcoin. You may be looking on something else, like Miss Missy before she was looking at Bake. You may be looking on a different chart or different token. So for you to understand the habit and how it's reacting, you need to study a little bit. And microstructure, it's just absolutely fine. Now, once you master this, because you need to spend some time, go back and use previous data and try to do microstructure and see how that applies.
I've literally been I've been trying to learn, like I've rewatched and like candlestick videos. There's some on YouTube and there's like a pro one and stuff. I've just been sort of rewatching it because I think like something like this could really sort of like help you understand of like what's actually going on with the structure and like where you could potentially be like heading like next, if you know what I mean. So I think this makes sense to me, if you know what I mean.
I understand completely. It makes sense to me as well.
Yeah.
You keep going.
Very much for that.
No, you keep going. After that you master learning how to read the microstructure and see the TCs and the SBs or chokes and balls, whatever you want. Use whatever it makes your brain understand what are you talking about. Do your charts, and after you understand the microstructure, then we're gonna move to order blocks for you to understand where you enter and when you exit. Because microstructure by this is only for you to understand and follow up. Okay, this is a change, it's going up. Okay, got a TC, I got an SB. Okay, it's a confirmation, I got another SB, it's another confirmation. We're going well. So when do I say I'm worried that I need to get out? When you get a TC. It's okay, hold on a minute, this is the time for me to get out. So when you get a TC and it's coming all the way up, which is like the trail line, break, retest, you see how it's related. And then you say, okay, you know what? It's failing to give me higher points. It's failing to touch my previous highs. Most likely, I think I should exit. You don't exit down here. You're trying to exit on the push to the up of the retest for you to maximize your entry from, probably your entry will be here to here.
Yeah, that so you've seen the confirmation that it's started the trend down. It's not beating the previous higher high, and it's telling
So you're looking at your exits, and that is 4% move to the Bitcoin.
And it's also showing you like the importance of entering at the right point, because once where you've got the red circle, the green circle at the bottom, if you entered there, you're stress free, even if it has a breakdown of structure and you get that confirmation and it pumps up a little bit. You've been stress free this whole time.
Right, yes, because when are you going to enter? Because textbook will say to you, oh, you need to enter the bottom. Okay, hello, explain to me, how do I know it's the bottom? There's no way that you know that I was the bottom, right? There's no way, there's no previous evidence to tell you that it's the bottom. So
you could almost guess a little bit, because of if you were range trading and you compared your sort of previous low, and you found that sort of trading in a range, that could be a bit of a tell sign that the previous low is going to be somewhere around this area.
Okay, cool. That could be. You can apply the range theory. I said, okay, it's consolidating. When you break it, I enter. You can do that, no problem, on a smaller time frame. But what you can do, I'm talking about order blocks, right? This is an order block here.
So the first entry would have been an aggressive entry, and then the second one, where you're marking out now, would be the conservative confirmed entry.
Yes, this is an order block, and I'm waiting to come down. And when it's going to come to my new order, it's going to revisit my order block. That will be my entry. So there's no way for me to enter here. I'll enter here.
Yeah, so I'm just going to post a screenshot of my setup at the moment. I set this up last night. So I've got the order blocks, and I think I've finally sort of set up a signal, like a set of signals that I'm actually sort of understanding, and this is quite useful to me.
Yep. So these grey boxes are order blocks with the numbers inside. It's good. I mean, you need to understand that market is moving from order block to order block. And if we zoom out a little bit, is the swing highs and swing lows, basically. When you get such a big move here, that's an order block. That's an order block, right? And that's a continuation order block. It is important, but not very important. The important ones are the extreme order blocks. Why? Because they change the direction. They were powerful to change a downtrend to uptrend. So that is a very, very important order block. So when and if the price is going to come back to this level, I expect to react. Remember that I said to you earlier that I have expectations when and if the price is going to come down, if and when it's going to react to these levels. Why? Because I got a huge order block here, and it happens to be on my support trend line, and it happens to be my golden zone. I've got three things here shouting at me.
And technically, the first bounce of the trend, that should technically be roughly around sort of 50% of the last big move up, right?
It could be, not necessarily. Yeah, it could be, but not necessarily. You're talking about discount and premium levels now. So.
Yeah, that's
right.
It, yeah.
Okay, so that's my 50% horizontal level from this wave to this wave, and it comes down. It broke my equilibrium that people call it equilibrium, but I'm interested to buy anywhere in this region, which is a discount region.
Yeah.
Right. So mainly you are pulling the 50 ratio, so to say, for you to identify roughly if you are in the premium or the discount zone. But if I pull a Fibonacci for that wave, I can do. This is the last wave of the lowest, and this is the highest. You can see that it came. I mean, even this is a range. This is a range. Yeah, I mean, this is a range. This is where it broke it. Let's use the last of the 15k. That was back in December, January. That was around that time. And let's remove some noise. Let's remove the MAs so people can see it. And I'm gonna zoom in a little bit. So under that red line, I know that I am in the discount zone, but it reacted on the golden zone. So yeah, roughly you want to make sure that you are under the 50, but golden zones are there. So I took the lowest point after that range. And then that was the lowest point.
Last point is 4.
Right. So if I go to the daily, because I'm in a 4 hour, this is the lowest wick of down movement. That was a downtrend. See the waves? Wave up, wave down, and then after that it went up. So that was my last lowest point of the week. After that low down, it goes up. That was my lowest point. So that's why I put my Fibonacci there. Right, and that was the high. I mean, that was a correction. That was a correction. That was a correction. It came to 38, right? And then it goes up. It had the momentum, and then came down to do a proper correction. It broke the 50, and it went down to the golden zone. So it got in my golden zone. And then after that,
the 38%. Like is often if it's a strong momentum. And what was it that I?
It's true. When you get a very strong momentum, yeah, it's true. I mean, what you're saying, I can almost listen to your mind. When you see a strong momentum, this is where you see you see that the price is reacting to in other zones other than the golden zone, right? And when I see these guys, is when I see that the price is coming back to the 38, you say, okay, you know what? It has momentum. It hasn't retraced yet. It hasn't reclaimed. It hasn't retested the uptrend. It hasn't reclaimed the up move. There's a momentum. And when I see a 38 happening, I keep in mind that, okay, you know what? In the future, it will come back to the golden zone at some point.
Yeah.
That retracement is not done yet. It retraced a little bit to 38, yes, but it's not finished yet. And it's going to come back to golden zone at some point. When it's very bullish, you keep on seeing the 38 coming up all the time, but it cannot go up all the time. It will come back in some point, because we do know that the market's moving into waves. And that box there, why is that? And I'll tell you why. I treat that as my maximum high, that level there, and this is my golden zone.
Yeah.
And it happens to be, that golden zone, top of the golden zone, bottom of the golden zone, it happens to have a trend line, a support. So I've got a support there.
Double confirmation.
And also I have that order block there. It's like massive.
Yeah.
So I've got like 3 things to indicate that area here. Watch out. That area there. Watch out. Price will react.
Yeah.
Now, if something major event takes place and Bitcoin is crashing, hey, you know what we're going to see? We're going to see coming down, go down. If that happens, okay, you say, you know what? It's going to target that order block. Another, you remember that we spoke about before, extreme order blocks. So it's going to come down to that extreme order block. So you're going to question yourself, what are you going to do here? If it's going to lose that, okay, we are bearish now. Remember that we spoke that if you lose that trend line, that support, we're going to change thesis. It's okay, we're going bearish. Bitcoin is acting bearish. Up to that trend line, it's acting bullish. After that, it's bearish. And you're going to look on the previous levels. And let me extend this to the left.
Once it broke trend, what's the time scale that you would use? Like, would you use a couple of 4-hour confirmations underneath the trend line to then get your confirmation that we are heading down and we're not going to sort of bounce off? Or would you do it on a daily? Or
4 hours fine. If you're looking to go all the way down to 12k and 7k, whatever, yeah, I'm not saying it's going to happen, but what I'm saying, if you're heading to these huge ranges like movements, then 4 hours fine. You cannot determine and get confirmations on the 15. 15 is like you're trying to ride the internal waves, but if you want to ride the swings, then you're looking on the 4 hour. Yeah. So since the beginning of time, Bitcoin is bullish. It's going always up and up and up. But when you get these huge momentum moves, do expect that it's going to retrace. And this is a previous level. So the way I mark it is I calculate this level here, that wave here, from this bottom to this bottom. So let's take this wave here on the daily, that wave there, that wave there. So let's pretend this is a last wave, correct wave, full completed wave. So the next levels will be down here, and you can see that the levels that I have on the Fibonacci are aligned on the past. I got a rejection here, and I got another level here. You got multiple. You got resistance. It became a support. It break it. Came down here. It became a resistance. Break it, and after that became a support. And another time, and that is back in the past now. I marked the Fibonacci from these levels, in the year 2022, but I see these levels reacting on this Fibonacci back in 20. And that is back in 20, and that is back in 20, and it's back to 20. Yeah, look at that.
Yeah.
Look, I mean, look at this level here that is bouncing up and down on the same levels.
The Fibonacci, like, the whole thing behind it is crazy. It's crazy, but it's fascinating to watch it.
It's scary.
Play out.
It's scary. It's scary. I mean, it scares me as well sometimes. And I'm like, wow. You can use the Fibonacci to make sure that you are on the right area. So far, Bitcoin, it is not on the discount on a daily. This is my discount. This is the equilibrium level. This is premium, right? This is premium, and this is discount. And golden zone is always discount.
Sorry, it's a little bit like off subject, but since we've now completed our, we're consolidating for the third time now, and we've had our third leg up, does this not mean that we should be technically coming down, having a bit of a consolidation, and then moving up. Or depending if it's how it kind of works out, well, obviously we should be going up. Like it's pretty obvious. Like, but it's in the long term. But I mean, for sort of like say the next couple of months, I like me. I know I'm not a pro or anything like that, but like I have just sort of like I've been an NFT for the last 3 years. I'm pretty a lot. But 20-hour days for the last sort of three years is like no sweat to me. So like I've been watching charts and coins and structure, and it's taken me about 3 years to actually start trading on an exchange. Like I've traded on like PooCoin, I've traded on like Dexes, I've traded like shit coins, if you know what I mean. And like I'm fine with that. Like I'm all right with Web3, if you know what I mean. Like I know how to get around wallets, like farming, airdrops, everything. So anything like that, I'm fine with Dexes. But it's like just watching it, and it just feels like it needs to clear some of that last big leg up in the inefficiency candle, if you know what I mean.
Exactly. You're on point. You are on point. Remember that when you get these huge momentums, right? Order blocks. I spoke about order blocks before. Order blocks are masses of orders that happen on the same price level, right? So like all the big boys, all the animals except penguin, because I am the penguin, right? So you have like sharks and whales that they place in orders down here, and not just one guy. It's like thousands of them, and they move the price up, and that created a huge momentum. Now,
but it still leaves some of the buyers behind because
it was so rapid.
Very,
very correctly. You said it. All the orders, because of the huge pressure, it's like a coiled up spring that got massively released immediately, and that is because of the huge amount of orders. But not all the orders were executed because the higher the pressure, the coil went so fast up. No, not all orders from the other sharks, penguins, and whatever you want to call it, seals. What happened is you need to come down, well, not you, the price needs to come down and reclaim the other sellers or buyers, other traders. They need to come down. So
cycle money, basically.
Exactly. I mean, the market, there's no way they're going to leave the money on the table unattended. They're going to go and grab it. There's no way. So that's why we say that they're going to come back. Until here, these massive orders got fulfilled. Whoever was left behind on this range, it was taken care of. What about this guy here? Yeah. And the same thing applies for these new orders, because these levels here took good care of these guys. But then you have the same effect. Now, these orders took these orders on board, but what about these guys now that they're trying to go long because they saw the reclaim of the trend line? So the price came down here and said, you know what, I'm going to take care of these guys. Okay, good. What about these? What about these guys? I'm still out of the market.
The guys that bought and were included in that order block will now be defending their position, so that the other buyers cannot bring the price down, and for the first buyers to lose their profits.
Right.
And that's the fight, right?
That's the fight. And you can see key levels there. You see support and rejection. That's the key horizontal level there. But, and eventually, as you said a little bit previously, you said, we've got 3 legs now. You've got one leg to up, a second leg, and a third leg.
Yeah,
Can it continue?
It's also a lot like the previous top of the second leg up. We're already sort of below it. We've not. Do you know what I mean? We've not like bounced off it. This is like a lot smaller step, if you know what I mean. So it's like the momentum slowed down.
You're talking about the pivots. Very good. Very good. That's why I draw the lines earlier. And what is happening, the distance is decreasing. You've got big gap, you've got a smaller gap, right? And the new high is even lower, smaller, the gap. So I have the first leg, so to say, just to give you a round up numbers, you got like 40% up. From here to there you got 20% up, and from here to there you got 5% up. So that momentum is dying. The first leg, let's say 39%, the second leg is 20%, the third leg is like, well, not leg, tops, it's like 4%. So that is indicating you that it's losing a little bit of steam, right? So if you combine all the observations that you do, it's okay, you know what, I see that you're losing steam because of the pivot points. I said, okay. Also, I have in mind that you cannot go forever, like 3 or 4 legs and then you go down. And another aspect that you put in mind that, you know, there's a lot of people sitting here that did not go fulfill their orders. So are they. These people here, up to there, that is okay, it's confirmed. These people, not. So you've got a lot of money sitting here. You've got a lot of money sitting here, and you've got a lot of money sitting here. So at some point, it was going to come down and clear all these people. Say, okay, on board now. The train came around, and now you have the time for you to onboard yourself. Golden zone. And what do we expect? Consolidation go up. And that will take all these people that have been waiting since 15K to get on board. They will come here to get another chance. Now, if something happens, like something major, like, I don't know, maybe US goes to another war, or maybe, I'm not talking about like exchanges crashing, but even let's say that Binance is crashing. Another major FUD news. What's going to happen? Most likely, it's going to break down. So, okay, whereabouts? Look to the left. You've got a lot of people waiting. So the market, you know, even at that point, this is the shift momentum. That is bullish, this is bearish. So the bears are going to be in control and say, you know what, we've got a lot of orders coming here, and it's going to come down, crash. It will wreck all the retails. The retails will get wrecked. People will drive away from crypto. They're going to run away from crypto and say, crypto is scam, we lost money, don't trust it, it's a scam, don't do it, run away, don't ever get in. Obviously, I'm going to be around.
So this is like the this is all like the the depression almost on the way down. So this would be like the depression, is it like level?
Yep, it is. So basically, when it's going to come down, all the big boys are going to stick around. All the retailers are going to move away. They're going to be, you know, really, really afraid. And when the price is going to come down and cool itself down, then all the whales, not the penguins, not me, but all the whales, they're going to buy again, right? And they're going to buy very, very, very cheap. Remember, guys, these traders. Let's talk about traditional trade. What are they? What the all the businesses? What are they doing? They're buying cheap for them to sell to the retailers, expensive, so they can make a profit, they can make money. This is exactly the same thing with trading in crypto and stocks and commodities. Anything. They're buying at the very bottom.
When everyone's greedy, be fearful, and be fearful when everyone's greedy. That's probably one of the most important things that I've kind of learned in the last, like I said, sort of 2-3 years.
It's great. It's great because this is how people, you know, when the majority are greedy, this is the time for you to get out. And this is what the whales do. They have lots of money to push the price up. The retailers do nothing. Seriously, we do nothing. We just ride along with them. But when they decide to short and sell their positions, they bought like 10 billion, they're going to sell 10 billion. They're going to drive the price down. Because they have the power. Yeah? And when it comes down again, they made the profits. Who they took the money from? From you and me and from the rest of us. Right? So, if that happens and the whales are trying to sell, well, not trying, they are selling, and the market goes down, they're going to buy again on a discount. Hold the zone. And then they're going to
so
drive the price even higher.
That's the investors that are only trading a couple of times a year, maybe once a year.
Yeah, once a year, 2 a year, but they put a lot of money into it.
Okay.
And that's what I'm trying to push a mentality to you guys, to be a swing trader and not a day trader. A day trader, no problem. You can, let's say that you need to make some money now, like $100, $200, $500. You need it. You want to make it now. Fine, go for it. Do it. But don't go heavy. Don't expect that you're going to make millions. What you want to do is zoom out, see the daily, and identify where is the POI, the point of interest of a whale, not for yourself, for a whale. So a whale is interested in this level down here, right? And next level, sorry about my Picasso drawing here. The next level that the whale is very interested is down here. Try to think like a whale. Try to swim next to a whale. You are not a whale yet. I am just a penguin, right? Try to identify where most likely a whale will move, because you cannot read their minds. You cannot read their minds, and you don't know where they're going to appear. Yes, the whales are diving very deep in the sea. You don't see them, and when you see them, when they go to the surface to breathe, and you cannot see them because of very deep waters, too dark. You cannot see them, but you see them on the last minute, and that is exactly with trading. Whales are not on the exchanges; they are offline. They've got like cold wallets. And then one day they decide when the price is right on the discount and where R is on the POI, and then they decide, okay, let's do this. And they're plugging the USB on the computer, and they're buying the position from the ledger, not even on Binance. And they get in.
Right.
And you didn't see that coming. You cannot.
Yeah, like you said, if you obviously you're not even putting it on an exchange, and there's not even really record of it, like, do you know what I mean?
There's no order block. Yeah, there's no on the exchange on the right that you have the order book. It's not even there. It's not even there. It's undetected. You don't know. I mean, what these all these big companies like BlackRock and Fidelity and Grayscale and whatever XYZ, what are they gonna do? They go to the brokers and they decide, you know what, I'm going to transfer 20 billion to you, like what happened yesterday, the day before. I found that was like 20 billion, and I could not find where it went. It was like 20 billion. It was only 2 billion showing on the altcoins. Where's the rest of the 18? Yeah, it was like a 20 billion move to the market cap. I said, someone just threw 20 billion out of nowhere. Who the heck was that? It wasn't me. It wasn't you. It wasn't the exchange. Yeah. Someone decided to just throw 20 billion into the market. Hello. What is this? It's undetected, and it happens on the last minute. So BlackRock now, they cannot open exchanges accounts like Binance and Bybit and BitGet, whatever. They're going to do with through ETFs, and they're going to buy like a contract ETF, and they can release some money slowly. 20 billion for them is very slow, trust me. They got the funds, it was evaluated as 300 trillion, and they said that they have available amounts right now sitting in cash about 10 trillion, right? Bitcoin, it's sitting total market cap, here it is. Right now we're sitting at 1.12 trillion, 1.1 trillion. They have 10 trillion cash. Can you understand what's going to happen if they're going to throw 10 trillion now in the market? They're going to destroy the whole market. We only see that at one, the whole market is going to go like 100x. I'm like, what the fuck? You cannot do that. They cannot do that anyway, because they cannot buy Bitcoin, because there's not a lot of Bitcoin available. but they're going to throw the money left, right, center and manipulate the alts, because there are plenty of alts out there. Two majors, Bitcoin and Ethereum. Bitcoin is like majority of the supply is out there already. So what are they going to do? Think ahead. What a whale like BlackRock will do will shake the market. So they're going to put some money on the alts, push the market up. You go crazy, you FOMO, you go in, and then they decide to sell. And what they do, they're going to sell, and the price goes down, and you're going to panicking. And what are you going to do? You're going to sell whatever you have for you to get some cash. And maybe you're going to sell your Bitcoin. And this is how they're going to grab the Bitcoin, from panic sell. This is the only way to grab Bitcoin. For someone, they're going to force someone to lose it for them to grab it. And also they're investing on mining companies that they mine Bitcoin. So they're building and buying off other companies that they mine Bitcoin. So they make sure that all the new Bitcoin is going to be available, it's going to be theirs. What about the rest of it?
Straight from the source, straight into,
to the pocket. And now it's not enough, not a lot to be minted, so to say. So what are they going to do? They're going to shake up the market and scare people out, panic people out, and sell it, and grab the Bitcoin from there.
Yeah.
This is the plan.
Yeah.
Does it make sense?
Yeah. Well, yeah, it does. Yeah, no. Honestly, I just I think of some stuff in my head and stuff, and it kind of like makes sense. But
they're gonna bull out.
Because I'm not like a pro, so I just once I have my confirmations and I know the rules of what's going on, then I can work out for myself. Like I don't like I said, I was like when you were saying about the MSS and obviously like the like everything else. Like I've been sitting there, like I said, for the last sort of couple of weeks, and I've just been trying to learn like candles. So I've been trying to start at the very, very bottom, like start from the basics, and then get sort of a good understanding of the basics, which will then help you sort of understand the next, if you know what I mean, the next thing, and or like at least that little section or segment that you've kind of understood and not mastered it, but you've kind of got like a general idea of what's kind of going on, if you know what I mean.
That is great stuff. I mean, keep doing what you're doing. Don't give up. And this is a general advice I'll give you to all of you. Yeah, it's the same thing. Don't give up. Let me lock that, it doesn't move. Don't give up. Try to do like baby steps. Do little things for you to buy leverage and make some money, for you to feel comfortable and for you to keep going. And try to identify where is the point of interest of a whale and try to swim with them. You cannot go against them, but you go with them, right? So until one day you become a whale.
Yeah. So so those points of interest, I mean, I've managed to like set some orders that I've kind of like thought are great, and like when it comes in like a day after and your order's just been sat there, and then that wick just comes down and then just touches your order to like almost like the penny and then goes up, like you can just like if it's that, do you know what I mean, if it's that bounce off the support and then it sort of takes off, it's the most satisfying feeling ever, because you're not there watching the computer, and do you know what I mean, you've set out your trades, you've done your stop loss, you've done your sort of take profit, not the stop loss but the take profit is I'm the worst at. I tend to either take profits too early, like I bought Pepe a couple of weeks ago at the very, very bottom. Like Pepe was the one that touched the wick, touched the very like to the penny.
Right.
I also had Ape, but then I checked out of there once I got up to like 30-40%, and in dollar wise that was only like maybe like $7 or $8. But I'm not too bothered about the actual quantity like money. I'm more worried about like getting
the PA and for you to understand where to get out and stuff like that. This is the point.
Yeah.
This is the point. There is no way for you
so
to
much more satisfying, and like you said, you can actually have a life then. Like otherwise you end up sitting there watching it and stressing about it, like and getting stopped out and whatever else. But it's like once you hit that level, and you've hit the level that the whales are on, you're protected by the whales almost, if you know what I mean, from being stopped out from that point.
What you can do is just pull a line now and then, do it. I mean, trying to get a line and say, okay, you know what, that's just an example to release the stress. You are in the momentum, you got it somewhere here, let's say you've got a break, or you got the break of the trend line, came down, retested, and you feel good about it, you go in, okay, fine. And then you don't know where is the end of it. You don't know how far it will go. When it's getting like boring, going sideways, and then it breaks it and then confirms, and then you say, you know what, maybe I can take some partial of the money that I made. This is your entry down here. So instead of going 100% out, you can say, you know what, I'm going to get 50% out because I want to reserve my entry price. And then you see after that, it's quite boring. Nothing happened after that level. And then you can wait because you're out of this trade. It got broken, came back, retested. It has no point of continuation. It doesn't give you any strength. And you say, you know what, okay, I'm going to skip it. I'm going to get out. I took advantage of that up wave. I'm going to get out. Not all of it. Half of it or 60% of it. I'm going to, they say, reserve my entry point there. And then with those profits, I'm going to do something else to find another coin that is moving, because this is not moving. This is like boring sideways scenes, guys. June the 23rd. Yeah, so June 23rd was Friday. We doing nothing. That was the last time. Let me bring the box there. That was the last time that we had a trend. Since then, we are in a range. We are not in a trend anymore. Right? So this is a level. It did not pass this level. That was a fake out. And it came back again. That was a fake out here. So that was the last double top that you had. And then was trying to come up again. Failed. And since then, it's going down. It's like boring. And this is a lot of people that get wrecked. Range can easily wreck people. Because it's ranging, they believe that they found the moment that they get early as possible, the break of the trend, right? And they say, oh, it's breaking the trend. Let's go up. Let's go long. And what happened? It went up, boom, fake out, came down, and it goes way down from your entry. And then you got another fake out, another fake out, and then here you got a break. Oh, finally. So let's zoom in here. So you see the break? It came down, retested. So you feel, oh, it's retesting, it's pulling away. What do? You buy for long.
Yeah.
And what happens? You get trapped. You have a lot of long positions trapped. Okay. Where are the stop losses of all these long positions? Let me put a line here for you. Let's say this is a thick, and make it thick and green, because these are buy positions. Now these buy positions, where do they have the stop losses? Most likely down here. Make it that red. People that are more, let's say, no, I'll leave that to that. I'm not going to exaggerate here. I want to give you an example for you to understand. So a lot of people entered here for long, and their stop loss is down here. What happened there and what happened there? Stop loss hunting. All these people that they got trapped here, and they're expecting to go up. Wait, it will go. We are still bullish. I'm listening to Thales, we are bullish. I'm listening to Carl, we're bullish. Yeah?
Yes.
And then they got trapped. And then what the market does, the market makers and the rest of the people, shake the market out. Cue all this high leverage. It is.
Yeah.
It is psychological. That's why that is our biggest problem that we have with the market. That we fight with emotions. Why? Because they play with our emotions. They're bullers. They're trying to bull us. All these people are bullies. And we here as a community, we try to teach each other and stick with each other. That's why I want to do like 3 times a week. I want to be with you, because I want you to understand and remember that you are not alone. We are all here together, and we need to stick together. Because if you're going to be left alone, and then you may be strong enough to get a hit once, you may be strong enough to get hit twice. Some don't. They're going to drop off. Then you are strong enough to get hit 3 times, and then sometimes you're going to get weaker, and then you're going to say, oh fuck it, I can't stand it anymore. I cannot support it anymore. I've lost a lot of money. Your psychology goes like to hell, 0, yeah. And then what you do, you get out of it, and you lose, and the people around you, they're going to lose. So what do you want to do? You want to stay united and trying to stick together and make better plans. And say, okay, listen, maybe, if you don't see since then, this area here, if you don't see a new high, and it's like sticking on your entry, you say, okay, you know what, it doesn't work. It's been like hours and days, that didn't work. So I get out with minimum profit or, break even. Get the hell out of it. And I'll come back later. If you decided to think that way, you got out a break even, you lost nothing, and then the market did that trick to the rest of the people, and you say, oh, phew. Then obviously, what are you going to do after that? So, okay, you understand that it's a fake out. So, okay, that was a fake out. It didn't work out. I'm going to wait for another major level. Where is that level? That trend line. That support. Wait for it. You're a sniper. I've said that example before. We all need to be a sniper. We wait, hidden, undetected, very silent, until the target comes into your scope. So you have a scope here. Here's your scope. Down here is your scope. And let's do a nice design here. Here's a scope, right? And you say, you know what? That's my scope here.
Yeah.
This is what you're targeting.
So it's almost like between the sort of like, do you know what I mean? The slowed down, zoomed out ranges.
Right.
Like you can either sit in traffic, or you can sit at home, have a cup of tea, and then wait for the traffic to die out, and then get on top of it once it's all kind of gone, like all the stress and all the choppiness.
Exactly. Either you're going to get ahead of traffic and be early. I mean, sometimes 5 minutes, if you leave 5 minutes earlier from home, you get no traffic, right? But if you missed it by 5 minutes, and then you're stuck in the road for hours. But if you stay home and say, listen, I'm not going to go now because I've got to head into traffic, I'm going to leave half an hour later because I know I have less time stuck into the traffic. So this is what I do. This is my scope, and I wait for the target to come in. And then what will I expect? What will I expect? I will expect for the price to come down here. And I say, okay, target in range. It means the price is in your scope. And now, what the sniper wants? It wants the target to be stabilized, not being packing in left, right, center. And then what you want? Consolidation. Okay, in respecting that area, target is stable. You check the momentums, it's dead. Like the sniper is checking the wind. No wind. So I know that my bullet will reach there. And then you take the hit. And that's it. So, okay, the market is not volatile. The market is not a downtrend. It's a consolidation. It's calm. Most likely, it's going to react to the upside. Obviously, you're going to put the stop loss as well. I mean, you're not stupid. But this is the way you want to target. This area is here, not anywhere in the middle. You don't move the scope left, right, center for you to get the price to be into your scope deliberately. You say, no, this is my point of interest. It's here. You come down to me. I'm not going to chase you. You're going to come to me. So you are creating a trap. The second scope let's say that the price goes like this, and say, okay, you say target is on range, I can see my target, but it's not stable, it's going bananas. It's okay, what are you gonna do? You're gonna move out, right? Let's see if I can these no, I can't, can I? 1, 2, 3, let's have a look. Okay, and then you're gonna move your scope down there. You're gonna move the scope down here.
That's a good area. You've got it pretty bang on, I think, there.
Yeah. So you say, you know what? It's not stable. It's going crazy. So I'm not interested. You need to consolidate a little bit and then give you a confirmation. If it doesn't do that, it's okay. I'll wait for you next time, buddy. When it comes here, it consolidates and then it's trying to go up and then you take the hit. You always wait for the price to come to you. You don't chase the price around. And that is a swing trade. Swing trade. Swing low, swing high, swing low, and then maybe want to go up and then give you a new high. And further up, and there will be another area up there as a new swing high. And that's what it is. I mean, you know, we need to keep it panic free, FOMO free, FUD free, anything free. Yeah? Trying to, you know, don't panic in day trading and scalping and stuff like that. You can do scalping as well, but you need to keep the rules. You need to keep the rules. Right? You need to keep the rules and say, listen, I'm not going to panic. I'm not going to get bullied by these guys. I know what they're doing. I know what they're after. I'm not going to give it to them. Simple as that. You're going to stand up and fight. I said, no. I play the games, these games, I play these with my kind of rules, not your rules, boy. I'm not gonna fall for that. No, I'm not. So it needs a little bit of time and it needs a lot of patience, and you need to make sure that the first thing that you need to tackle, so to say, is your emotions. Don't let yourself fall into a panic. Don't let yourself fall into the fear. Forget about that. Ignore the noise. I do not check the bubbles. I do not check TikTok. I do not check Twitter. I do not check Facebook. I do not check anything. I don't care. I care about the charge. I do my TA, do your market structure, and say, listen, this is my last high, so to say, right? And this is my last low. Break these, and then I'll see what I'm going to do. If you haven't break these, you're in the middle of nowhere. I'm not interested. Move on. Right? And that's it. And the list. At least, you see, I have, if I go right here to Crypto Intel, whatever, I've got like plenty of them. I have a large list. Yeah, here, large. All the major alts. Majors are not alts. I've got 61 alts. Now the big market, medium and big market caps. And then I have under my Sona. Under my Sona is the only ones that I'm looking at. I'm looking at Mars.
What did you say that was? Under Sona, okay.
Under Sona, yeah. So because I was in submarines, I was using the Sona. So you can say radar, whatever you want to call it. But under Sona, I have Mask, I got GFAL, I've got Waves, I've got Atom, I got Algo, I got HBAR. Right? I got Leo, I got Sand. This is the coins I'm after. This is what coins I'm looking at. So I can change the percentage. And I know now HBAR is number one loser. Because of the major pump that we had 2 days ago, like 16% of the up. Now it's down. Yeah. Then I have ARK, and then I have Waves, 4%. I got Sun, 3%. I got Mars, 3% down. I got Algo, 2% down. Atom, 2% down. GFAL going up. Okay, hold on a minute. GFAL is going up, no problem. I like GFAL. My entry is down here. That's my entry down here. When I got the confirmation that he's pushing away from that trend line, it's not a fake out, I entered. And you can see that he broke the trend line, It went up, came down, retested, and was pushing away. I said, okay, I'll enter, and this is my entry. Since then, I never looked back. Is
that like, because it's quite a long time frame? Is that like a low leverage or a spot?
No, it's a spot.
Or is it? Okay, yeah.
Yeah.
So what would happen roughly? Because I've been holding like Bitcoin for like 4 or 5 days or something like that now, and it's not a lot. I've only got a 5x. I don't know, maybe I think I've got maybe about $400 in it, so not a lot. So I'm not too worried about it. Like being a little bit under at the moment. But what would happen to that order if it stayed on for like say like a month? So would the fees like start racking up after like a certain amount of time, maybe like after a week or two or something? Or
no, you don't need to worry too much about it.
Okay.
I mean, there are fees on the way in, there are fees on the way out, and you have the maintenance fees and the fact. I mean, as long as you are in profit, you are still good. The exchanges, let's say, the exchanges like Binance and BitGet, they make money all the time. 100%, they make profit. Whatever you do, you buy, you sell, you're winning, you're losing, they make profit. How? Once you get into the trade, they charge you. So you put $200 into the exchange and say, execute these by $200, and then automatically you see that your amount of your margin is $198, roughly, or $199, right? Yeah, so you go 200 in, and then you see that you got 198 as a value, and you're like, hold on a minute, I just put $200 there. Actually, they took the 1%. They took the $2.
I thought that was obviously I thought that might have been the fee, but also the change in price.
No, like, it's a fee.
Okay.
It's a fee.
Okay.
Yeah,
okay.
It's a fee. So they took the money just before you enter the trade. So they got the profit. And then when you decide to sell, and let's say that you are selling and say, okay, hold on a minute, he's in profit. How much in profit? How much is taken out? And then they're going to charge you again. 1.2% of the total amount that you want to take out with your profit. So they take some from your profit too. 1%. Right? And then it's the maintenance fee. The maintenance fee is how long you've been borrowing the money. So they charge you every 8 hours as well. Maybe sometimes you are negative, sometimes you are positive on the funding fees. But, you know, if it goes well to you, then it's positive. When it's not going well with you, it's negative, so you have to pay out. So again, it's like 1%. So, but 1% and holding a 5x for 1 week or 2 weeks, it's not a real thing. I mean, keep in mind that every time you lose 1%.
Okay.
Yeah.
All right.
The problem that you need to think is about the leverage. The higher the leverage, the higher the amount they're going to charge you, because you borrow more.
Yeah, it kind of makes sense because you're borrowing more money though, aren't you?
Exactly.
Yeah.
So I rather make sure that I rather make sure that I have a larger size than larger leverage. Try to master that and say, listen, instead of me going $100, what if I go $500? Yeah, $100 5x. What if I go $500 1x? It's the same size. But if I have the $500 available, why should I need to leverage the $100 5x and pay them fees for? Yeah, why do you want to pay fees? Why do you want to borrow money that you have? So rather
to make more money.
Yeah, no. But if you have $500, that means you have it. So don't take $100 and 5x it to make it $500. I mean, if you have $500, just go for $500. You pay less fees, you borrow less money, and you make the same amount of money, and you profit.
And you've got a larger liquidation gap.
Exactly, and the stop loss and liquidation is going to be far away from you.
Okay.
You know that you know that you get charged on liquidation as well. You pay a fee for you to be liquidated.
Oh, really?
I mean, no matter that you're losing and you're going towards liquidation, you pay a fee for it as well.
I feel like a cow.
Yeah, well,
Milk.
they're milking us. Exactly, they're milking us out. So
Yeah. Oh,
that's why a lot of people. I have a table. Let me bring that up. I got it on a PowerPoint. Let me bring that up. I have a table demonstrating the liquidation, and a lot of people believe that if I go 1x on futures, they say, you know what, 1x, you don't get liquidated. Well, I got news for you. You do get liquidated by minus 98%. That is on a liquidation price movement that you need for you to get liquidated. And that is not calculated your entry fees, your maintenance fees, and your exit fees. This is just for you how much the market needs to move for you to get liquidated. It's 98%. Remove 1% of your entry, 97. Remove 1% of your exit, 96. Remove any funding, forget about it. Anyway, it is not 100%. It's less. So it's 98%. That the market moves against you by 98% and you get liquidated. On 1x. On 2x, you need 48% and less.
Mm-hmm.
So a lot of people, go 3x or go 5x. Let's use the example of 5x is 18%. And people, they do very quickly the math in the brain and said, okay, you know what? I'll do 5x, so that means I have 20% allowance, 20% threshold, so to say. Why? Because 20 times 5 equals 100. Here it is 20%. Well, a lot of people get liquidated before they hit the 20% target, and they're like, hold on a minute, why did I get liquidated? It was only about 18% or 70%. I had more space. Why the market, the market or the exchange took me out?
Because they want their little bit before that money sort of disappears.
Exactly. Right.
Yeah.
So they're going to make profit. So you don't get liquidated at 20%, you get liquidated at 17%. And the higher the leverage, the less market move it requires for you to get liquidated. And I have a nice funny example here. But if you go 100x, you will be liquidated at positive 0.1. Yeah. Theoretically on the books is minus 0.1% move, and you are liquidated. Right?
Yeah. So really, looking at that chart, really sort of, I mean, I don't want to say it's as well. I've not traded on that or anything like that. But I mean, I think 20x is probably really, unless you're an absolute don at this, you don't really want to be going ever above 20, because I mean, like less than 4%. That's that could just be like a little sneeze.
I know, and that's why I have the calculator. And I have the calculator here to indicate what is the safest maximum leverage you can go on a trade. And I have this first table. I mean, all the alumni know this, but if you guys are here from cohort 8 and cohort 7, you may haven't seen this because I've been a little bit away for quite some time. So you may haven't seen this, but this is my, let's say, calculator. And let's say that I have available, let's make it round numbers, I got available of $1,000 in my wallet for me to trade. And this is an example that, what if you reach 10%, yeah, and how your wallet's going to look after 10 continuously losing trades. So the first time you're going to lose $100 because this is the 10% of the 1,000. The second time, if you're very strict with your 10%, you'll have remaining $900, so your next 10% loss will be $19. Because a lot of people make the mistake and say, listen, I don't want to risk more than 10%. I got 1,000, so that means every time I'll trade with $100. And I do that mistake. So after 10 losing trades, they lose $100. 100, 100, 100, 100, 100, 100, 100, 100. And after 10 losing trades, what happens? You got the count blown off. You just lost it completely in $1,000. Because every trade was losing $100. And don't fool yourself that you don't have 10 continuous strikes of losses, of losses. You can have. Everyone can have. Yeah, it doesn't mean you're a bad trader. It just happened that you're riding the wrong wave. You just go against the wave. You go against the flow, and one bad decision leads to another one, and then you have, the next minute you find out yourself that you have 5, 6, 7, 8 losing trades in a row.
So after sort of when you get to sort of the trade number 4, that's risky because looking at those numbers in my head, that's gonna take some hell of trading to get you back to your original 1,000. But then once you get to sort of like 6 or 7, like you're pretty much not going to make it back. Is that right?
I'll explain to you. You're very close. So if you stick to 10% strictly and say, listen, I lose $100 now, I've got remaining $900, so next time I need to lose 90, or I lose 90. If you do that, you are progressing in a better direction. However, even after 10 losing trades, you're going to lose 70% of your wallet. If you don't do that tweak that you need to readjust your 10% every time of the remaining wallet, if you don't do that, after 10 trades, you blow the account, de facto. If you adjust your 10% every time of your remaining wallet, after 10 losing trades, you're going to be 70% down. And then I'll do the numbers for you later about another table, how much you need to gain to break even. That will be very interesting. Right. If you do 5% after 10 losing trades, you're going to lose 43% of your wallet. If you do 2% risk, that will give you 20% loss of your wallet after 10 losing trades. That is much, much better. Yes, exactly to your point, that if you only, after 10 losing trades, if you lose only 20%, that means you can recover that 20%. Remember, if you lose 5% up to 5%, you need 5% move to the up for you to break even.
Yeah.
So 1, 2, 3, 4, 5% down, you need 5% up, and you're going to be break even. It's not exactly 5, it's going to be 5.1, but you get the number round, right? So risking 2 and 1% is more ideal. Don't go over 5%. 5% is very, very generous, and remember that after 10 losing trades, you're going to be going down 43%. You're going to lose 43%. So half of your wallet, roughly half of your wallet will be gone. Yeah? So 5% is very, very, very generous. 1 or 2% is good. 3%, it's okay. Anything about 3%, 4, 5%, you need to understand that you are risking. What are you risking, and how often are you going to do that? Maybe you have you have 1%, 2% or the majority of your trades, and one trade, just for once, you say, you know what, I'll risk it up to 5%, but just once, just one trade. That's okay. Again, it's healthy, right? But you need to make sure that you do that very minimum. You keep that to very minimum. 2%, 1% is fine. 3% is generous. 5% is very, very generous. And don't do it constantly. Don't be in a habit of that, right?
Looking at this table, what I might do is I might do this. You've got 1, 2, 5, and 10. Mm-hmm. So what I might do for the next, say, 8 months ahead. So what I might do personally after this is I might just try, because I stretch myself too thin. Like yesterday, I was in 7 or 8 coins. Mm-hmm. I mean, until yesterday, trading the last sort of 2-3 weeks, I was down a little bit, but in the first couple of days, I had some great trades. I had like some 50s, 60s, and I was like, wow, this is easy. And then then I started sort of I don't know. I think it's just beginner's luck sort of thing. And then I started thinking about it more and stuff like that. And I went a little bit under, and then I quickly curbed that because I was like, right, this is clearly not working after day one. So like I just tried to step back a little bit. I had a little look, had a recess, redone some signals that were working for me previously. And then basically just until yesterday I was kind of like, I think I was even up. I think I was $30 up on the account I sort of started with. And then yesterday I got a little bit wrecked because I didn't pay attention sort of thing, and I had some sort of like $15, $16, $20 wins that I should have just taken out. Like I said, I didn't. My problem is that I didn't set a take profit, like, if you know what I mean. Because normally I spend so much time at the computer, I can normally sort of do it, but that was my issue, and I ended up sort of getting back to sort of breaking even now. So I'm not too worried. It's obviously like another lesson, but for the next 8 months, what I might do is I might trade for the next 2 months. I'll trade 1%, and then see how that goes, and then if I'm satisfied with that, then I'll go to 2% for 2 months, and then if that goes okay,
I'll give you another aspect. You can start with 2% now, and as you increase your wallet, you minimize your risk. You go down to 1%. Because your size is going to be larger.
Okay.
Yeah, go the other way around. You can start now with 3%, so you can recover quickly, but you need to be with your strategy to be very strict, and with your stop losses to be strict. Yeah. What you did, you stopped and you hold back and say, okay, hold on a minute, I'm doing something wrong here, and you reset yourself, and then you reapply the same thing again from the beginning, and then you break even. That's good. This is what we all should do. I mean, we get very, very excited when we got like 2, 3, 4, 5 trades, winning trades, and then all of a sudden you feel that you are on the top of the world and you are the best trader out there. And you say, I have it, I got it, I am top of the mountain, and then you get a slap in the face. Yeah, you get a slap in the face. Yeah, with open hand. It's not even a punch. It's like a slap in the cheek.
Yeah,
and tell you,
I know.
Hell, wake up. Yeah, so you wake up and say, okay, hold on a minute. I've lost some of my, my profit. What's going on here? Because you overdo it. You need to calm down a little bit and say, okay, I have 3, 4, 5 winning trades. Calm down a little bit. Walk away. Have a walk. Then come back next day. And then you start fresh. Right? Now, when your wallet at the beginning is very small, you'll risk a bit more. But when your wallet will become wealthier and more powerful, then you turn around and say, listen, I don't need to risk 3% now. Let's go down to 2%. And then when you get better, because now you're not betting with $100 and $200. Maybe when you are wealthy, well, let's say that you have $50,000 now sitting on your wallet. Now your interests are not $100. Your interest can be $1,000 every time. So listen, $1,000 and 3%, it's a lot of money. So let's go down to 2%, right? And then when you become 100K, 200K on your wallet, now you're going to enter with a trade with 10,000 on each trade. And so listen, now I need to minimize my risk because, I'm handling now with a lot of money now. I'm going in with 10,000. So you go down to 1% risk because your size is such great. You have a great size.
You've got more range within your money to.
Exactly.
I don't know how to
you can handle it. You can handle more better than market manipulation, and you can tell them, fuck off. I'm not going to use 10x leverage anymore. I'm going to go 5x. Even later, you go 3x.
Yeah.
Or 2x. Yeah. So you minimize the risk and you minimize the leverage.
Yeah.
So the better you get.
Sorry, bro. I was going to say, I'm gonna have to knock off in about 10 minutes. I got to take my dog to the vets in a minute. But
All right, okay, bro.
Before I get off, I just wanted to say, like, honestly, like, thank you so much for what you guys are doing, and yeah, like everyone in the Banter team, and yeah, it's like this. I've searched around, I've had a look around, I've been in alpha sort of groups to do with NFTs, not with like paying for its subscription, but like something and then getting some sort of alpha out of those groups and stuff. But like, I mean, this is, I mean, like what you guys are doing is pretty incredible. Like this is like really undervalued, and I shouldn't be saying that because you guys will start charging.
No, we're not charging. We're not, you know, don't worry about that. But we are not charging. But we're here for the community, and it's quite funny that you brought that up, and I appreciate it, and the rest of the team will appreciate it as well. We as mentors and the mods, we are all volunteers. So by being here and talking to you all this time and explain all this stuff, we do not charge you, obviously, but we don't get paid either, right? So my let's say my pay is for me to see you succeed and for you to get better than me. That will be my payment. If I see you all guys succeed and be better than me, and then next year you're gonna send me a text, hey Hallis, I'll buy you your holidays, and I'll be excited. You know, I'll be very, very happy. I'll be smiling. Yeah, if I see you, yeah.
And I'm not just saying that, but like, yeah, like, I mean, yeah, I am a generous person, so if I ever get up to a little bit, I'm sure I'll buy you guys a drink.
No, bring a coffee. A coffee. This is a coffee chat, so you know, buy me a coffee, guys, later on. You know what I mean? You know, even I know Sabuka is not here, but Sabuka was another, let's say, a student with me, because I'm from cohort 2, and Sabuka was from cohort 2, and then because he's a pilot, he travels all over the place. He decided to camp. Well, he just flew to Cyprus for work, and he texted me because I'm in Cyprus. He was on the other side of the island, and then I decided to hop on the car and drive and find him. And we spent the whole day, because he was only staying for one day in Cyprus. So we spent the whole day, you know, chatting, having a lunch and having fun and talking about crypto and space and the school and the people and the students. You know, is the journey, guys. This is what, you know, we're here to help you guys and build a strong community and that you can rely, and you know, in the future, you never know what the future will hold. You know, we may meet some point somewhere, maybe in Cyprus or maybe in Greece, because I'm from Greece. So you know, you may send me a text message and say, hey, listen, I'm in the Greek islands. If you're there, I'll make sure, if I can, I'll come and meet you. Seriously.
Yeah, so, no, dude. It's it does come across like that. Like I said, you guys are probably, well, not probably, but I've actually done a bit of research, and like I said, I've been sort of around and stuff like that. But yeah, this is like priceless. It's really incredible what you guys are doing. So yeah,
I appreciate it very much. Thank you.
One more thing that I just wanted to say, since we were talking about all the whales and institutions and stuff like that, there's a thing, I think I've mentioned it before. It's on Netflix. It's called The Forecaster, and it's about Martin Armstrong. I don't know if you've heard of him.
Right. Yeah.
But he's basically created an algorithm back in like the 80s or something like that could predict like every war, every major collapse, which he predicted to the day the Tokyo collapse. He predicted to the day the Russia collapse in 91, and he's also worked out that there's a cycle of 8.6 years that a major event happens, because governments they've never paid back any debts, and the only country that's ever paid a debt back was apparently Romania back in the 90s, and that's the one single payment that's ever sort of happened. So it's like it will really open up your eyes to basically like the world, because like we were saying about the charts, it comes back and recycles money and stuff like that. That's basically the world all over, and all we do is just recycle money from one place to another, whoever's in crisis.
I know. It's very true. And You need to.
Yeah,
You need to remember, guys.
If you do get a chance, like I said, it's called The Forecaster. It's on Netflix. It's probably one of the most interesting things I've ever kind of watched. And
Okay, I'll search it and I'll find it and I'll bring it up to the students here.
Pretty cool.
But yeah, thank you very much for you came up here. I'm very glad that you came up here, and we're happy that we have that nice chat and talk about even strategy and even a little bit of theory and wells and stuff like that. So I thank you that you brought, let's say, you brought that direction of that conversation to that towards that area. So thank you for that. I appreciate your all your appreciation towards ours, and all the good things that you say. It's much appreciated.
No, honestly, thank you very much, and you guys have a good day. Happy trading, everyone.
Good stuff. Thank you very much. This live is gonna be, it is recorded. It's gonna be uploaded on YouTube. So by tomorrow it should be available. But guys, remember when you when I upload, because these videos are very long. This is how long we are on. We've been on for 3 hours, 2 hours and 46 minutes. So almost 3 hours. By the time I close this, will be like 3 hours. Yeah. So when I'm gonna upload it, YouTube is going to take another 6 to 7 hours to process it, to render it. So when it's going to be available at the very beginning, you may see a low quality. That is not due to my upload. It's because YouTube is releasing the low quality first. It's doing processing on each quality level differently. So the very low quality is going to finish first, the high definition is going to finish second, and the last one is going to be 4K. I do 4K, so it's going to take like 6 to 8 hours to finish. So you're going to see it tomorrow up there. At the beginning, if it's a low quality, shit quality, I apologize, it's YouTube, not us. Yeah, it's always 4K. So guys, don't panic out there. Have your thesis, have your strategy. Don't FOMO, don't FUD. You're going to do better. I believe that you can do better. And we're going to be around. We're going to stick around. Whenever you have a question or anything like that, we're going to be around. So dominants are popping up. Total 1 and 2 and 3 market cap are going down. So that means they're going out of the crypto space and they're going into the stable coin. So that's why you're going to see more drop coming in. So that's why Bitcoin is like red. We've got red candles on the daily. So watch out, be careful. You know the levels, you know the point of interest. Do small trades for fun, for practice. But if you want to go like decent trades, I'm not going to say heavy trades, but decent trades, make sure that you are in the point of interest. Make sure that you are entering on the key levels and not in the middle of nowhere. That will save you a lot of hassle, trouble, fear, and stuff like that. Right, good. Great conversation, I agree. Great conversation, thank you very much. It was very, very nice. Good. Right guys, I have to leave. It's around almost 1 o'clock. The rest of the banter will do some lives as well, so I don't want to collide with them. Thank you very much. I'll see you back on Friday. Bring up other nice, brilliant conversations up here. If you've got any questions about TA and stuff like that. It is time for the Sheldino. That's why I have to hop off. We need to keep the flow in a nice healthy manner, not overriding everyone. So thank you very much. I'll see you on Friday. Take care, have fun, trade safe out there, be wiser, don't FOMO, don't fear. If you've got any problems, tag us or wait for Friday. Alright, take care, I'll see you later.